Okay, good evening, everyone, and welcome for today's webinar on automation of audit through technology. I am CA Shabajit Singh Soy, and today I am your moderator for today's webinar. With the emergence of AI and other technologies, I think the days are gone where we used to depend on manual documentation and audit. So they can't have a more appropriate topic for discussion today. And we'll be hearing from two experts and eminent speaker on this. But before that, we'd like to welcome our special guest, CA Charanjot Singh Ji Nanda. Mr. C.A. Nandaji has been a Central Council member and he's also the chairman of Digital Accounting and Assurance Board ICI. He is also the chairman for Internal Audit Standard Board ICI. He is also the chairman of the Committee on Information Technology of South Asian Federation of Accountants. He is also the vice chairman for the Banking, Financial Service and Insurance Committee ICI. So we now request CS Nandaji to please address and open the webinar.
A very good evening, gentlemen. I can see the Honorable Vice President of SAFA, Shri Heshana Kurupu, sir. Also, the two very revered speakers of the day, Mr. Premnath Degla, Mr. Siva Prasad, my younger brother, C.A. Shabas Singh Ji Soin, and all who have assembled here to go home more enlightened. I'm sorry, there will be some music coming in. I'm sitting at the airport in Nagpur. Ladies and gentlemen, this topic is a topic which is well chosen and well picked up for your professional updation. Automation and the use of audit to have better results is today's topic. I would request both the speakers to do justice and take all the queries that may come in the way. We all know that technology can change the life of all practitioners, whether they are chartered accountants or not. But DAB in its total indulgence to create value and worth for the participants is trying to appreciate the fact that holding such programs would ultimately put across the barrier of not using technology. You have to use technology and ensure that value addition is done in audits. So I'll not speak much. I'll give back the dice to Mr. Shabajit Singh Soin, who will take the things forward. My heartiest salutations to the Vice President SAFA, Mr. Heshana Kurupu, sir, who has joined. He's really a great value add to this program, sir. Over to Mr. Soin. Soin, sir, you're on mute. You have to unmute yourself.
Thanks, Nandaji, for your encouraging support of words. And now we like to welcome Mr. Vice President SAFA.
Thank you. You want me to speak few words?
Yes, sir.
Yes, sir. You are the guest of the chief guest of the day, sir. Your words will have a lot of impact and would create wisdom amongst the participants, sir. Please.
Thank you very much. Thank you, C. Singh Nanda, Chairman, SAFA Committee on Information Technology, and other distinguished invitees and resource persons at the webinar today. Actually, I'm deeply honored to address you all at this SAFA webinar on automation of audit through technology. And I extend warm welcome to each one of you who has joined today from various corners of the region, I believe. I think this information technology committee under leadership of C. Nanda, Chairman, we have seen many activities happening and extending the same to SAFA other countries. So I thank you for this initiative, and I think most weekend towards Friday we see a new webinar coming up. So thank you very much for taking that lead and enlightening the region as well. As the topic suggested, I think the theme of this webinar, automation of audit through technology, is not just timely, but pivotal in shaping the future of our profession. As we know, technology has opened up unprecedented possibilities, promising increased efficiency, accuracy, and transparency in auditing process. So by leveraging automation, auditors can focus more on higher value tasks, critical analysis, and providing valuable insight to their stakeholders. On the other hand, with the adoption of technology comes the responsibility to ensure its seamless integration into our practices. While automation brings significant advantages, sometimes we may have to remain cautious about potential challenges and risk as well, especially with regard to cybersecurity, data privacy, and maintaining professional skepticism in the face of technology. So these are some of the areas I believe during the discussion we may be able to get ourselves educated. So with that, I think I would like to extend my thanks again to all the organizers for inviting me to attend this webinar and encourage all the participants to make this most out of this opportunity. And together we can elevate the standards of the accounting profession and adapt to the ever-changing demand of the global economy. So thank you, and I wish you all an engaging and fruitful webinar.
Thank you, sir, for your encouraging words. And now it's the time to introduce our two eminent speakers for the day. First, we'd like to introduce Mr. Premnath Degalaji. He's a chartered accountant with a lot of experience. He's also currently partner with Ramchandra Company, Chartered Accountant, Hyderabad. He's also the faculty for ICI Concurrent Audit Certification Course, and he's also the faculty for ICI GST Certification Course. He has also immensely contributed to various ICI committees. The next speaker is Mr. Siva Prasad. Mr. Siva Prasad is an experienced chartered accountant and also a managing partner with SGRP and Associate LLP. He's also the founder and mentors of various startups, to name the few, Any Audit or in SkillUp.co.in. He also has been a data scientist associated with Advanced Management Program on Business Analytics and Indian School of Business. He's also the chairman for the Indirect Taxes Committee. Now I request both our speakers to start the discussion. Sir, Prerna, sir, please unmute.
Yeah. Thank you. Thank you very much. At the outset, I thank the chairman for giving this opportunity. I thank all the members. Very good evening. For us, Nanda sir is like Bhishma Pitamaha. Looks like old but young in his ideas to catch up to the present generation. I have a specific thing in my mind by saying Bhishma Pitamaha. I have learnt in Mahabharata that where Bhishma is living, he can control the time. Meaning, if I can control the time means I am ahead of time. So in that sense, I am talking about Nanda sir. He is ahead of the time to see that the value addition is given through DAP, not only through DAP, wherever he is. You may ask me, is there a specific incidence? Yes, there is a specific incidence where nowhere in the world you have forensic standards. Sir has initiated and brought it live just 1 month back. In the same way, sir has also started taking initiative, which I'm sure that in next 1 month of time, the world is going to see international, going to see information technology standards coming out for the first time in the world for the framework which is spread across many places will be combined, and sir has taken a leadership and will be great. We will be proud to be a part of that. So thank you, Nanda sir, for very good leadership.
Always there.
Thank you, sir. Good evening. Good evening, sir. Very happy to join this, and I share the same experience. I met Nanda sir first time at National Conference, Hyderabad. The level of energy. So he is truly Vishwa Pitamaha, as said by Premnath sir. And I'm truly thankful to the DAB for providing this opportunity. Yes, sir. Premnath sir, you please initiate and take it forward, sir.
Right. So next, at the same time, my best wishes to Hasna Kurupu sir, the SAFA's Vice President, for sparing valuable time to be on this platform. So coming back to the, before I start, I'll just share my presentation. So it's world over today. We are talking about ethical practice. So when I say it is ethical practice, profession is what is ethical practice? Is profession is generally defined as a type of work which needs a special or a particular skill, often one which is respected because it involves a high level of education and skill. So we are moving into ethical practice with technology. Having said, if I'm talking about ethical practice and technology, we need to talk about investment, we need to talk about profits and all. But yes, in short term, if I talk about technology, then I may not be remunerative in short term. But if you look at the very first page, very first section of ICAI Code of Conduct, it talks about we, the chartered accountant, should act in the public interest, exclusively in the public interest, not exclusively to satisfy the needs of individual client or employing an organization. So we act in the public interest and we comply with standards. Those standards are ethical, professional, and technical standards. Whether technology can address compliance to ethical, professional, and standard technical standards is what we are going to see in this session now. So I'm saying audit automation for better quality, but not for convenience. Convenience and quality doesn't go together. So this is what first thing we need to keep it in mind. First thing is quality. Of course, convenience will follow it, but convenience alone should not be the motto of audit automation. The motto of audit is quality. So automation also should go behind quality, but nevertheless, most of the people look at automation for convenience, but when it comes to the audit, it is not convenience, it should be quality in mind. Having said, we'll look into this session on exponential risk exposures, that is, risk will kill the profession. Let us see how we can guard the risk. Then technology is breaking CA's monopoly, meaning many other professionals are entering into this. So whether can we protect our profession? And then internationally, when we are talking about SAFA and all, internationally, the audit quality issues are reported. I'll share a few of them. It's not only the India where NEFRA we are talking about. Internationally, we have these issues. Whether automation can address these quality issues and what are the major hurdles in adopting tools. We'll just try to discuss these issues in this session. Then these are exponential risk to the chartered accountants. That is, conscious documentation will protect, or else digital footprints prove non-compliance. Hence, before a regulator steps in and says that I am not complying, before the regulator is saying that I am not complying, let me correct myself with the technology. And how is regulator today saying that I am not compliant? That is through technology. So the same technology, let me use it, and before the regulator hints me, let me change myself. So the integrated information digital footprints are big challenges to the chartered accountant, and at the same time, they are opportunities for us. Then there are surveillance through the data integration. Various departments across the globe, it's not within India, across the globe, various data sets are getting integrated, and preventive measures are happening on its own, and that's where we need to be more cautious in expressing our attest functions. Non-compliance to ethical, technical, and professional standards are not limited to India alone, but across. When weak firm policies and procedures are unstructured, this again I say this is not limited to India. Weak standard quality controls and client expectations are major risks to that. And then clients' attitude and behavior sometimes are where we need to guard them with ethical behavior. So under these circumstances, let's move on to the technology. I've just put it in a humorous way, in a lighter way, that the regulators are like Kim, sorry to say, they are with arms and ammunitions. To this extent, I as a chartered accountant, trying to face the heavily guarded, heavily armed regulator with bows and arrows, which we all know that it's not possible. So I also need to be on par with the regulator with full arms and ammunition. With that sense, I've just put it in a humorous way. And coming back, these are the NEFRA's experiences where in 300 pages of report, they have said the word failed is used and professional skepticism is not used, like 16 times they have used, and they have referred auditing standards 129 times. This report is on the NEFRA website. I don't want to go into details. Then these are various page numbers where they were referring about various standards, non-compliances. Then these are the international, I was talking about where in US, when you talk about the US regulator and which is available on the web now, which says that, which talks about 40% audit with deficiencies rose for second year in a row to 40% in 20 and 22. So this is the example of the way what's happening in US. So whether technology can is what we are trying to talk about. And further, and for the recent experience in Korean, when India has started with change in the auditor, change of auditor for every 5 or 10 years of time, even Korea has started with, they have a 10-point formula, and they are trying to talk about grading the audits. Before that, the institute has come out with AQMM, wherein I myself will rate I as the auditor will rate myself and put my ratings on the web. So the people will know what I'm complying to. Before someone else is doing it, I'm doing it. That's what Korean report is in the market. And these are international development or quality related, like PCAOB or USA, they are talking about auditors lack professional skepticism, identifying the risks of material misstatement, documentation, improve training and supervision of staff. NEFRA saying the more or less the independence is more talked about, risk of fraud, improve their communication with audit. And then FRC UK is also talking about risk of emerging technologies, changing market conditions, whether transparent way of carrying out. Australian regulator talking about communicating with audit, improving the documentation standards, training the staff, and Canada regulator talking about professional skepticism, addressing risk and risk of fraud, and Japan talking about independent of clients and so on and so on. It's not limited to India. I'm saying whether is it possible for with the technology we can come out of all these issues is what we'll try to understand today. Yes, when coming back to the ICAI quality standards, audit quality, there are some do's and don'ts, do nots that that are available, freely available on the web, wherein recently ICAI has issued a standard working paper documentation in Word, which can be converted into Excel, which I'll be dealing in a shorter time. Whether this much, the working paper, what has been provided by the institute, ICAI, I mean institute is ICAI, can we automate this is what today's session is all about. Yeah. Most of our presentations today, we are looking at ICI TV. It talks about it's making members to learn, that is do's and do nots. And there is an ICI learning hub, which is also talking about what should be done, what should not be done. There is more than 70 years of learning has already been done here. Then FRRB, what we should not do, those experiences are given. QRB has given what we should not do, common errors. I mean, FRRB is talking about common errors, QRB is talking about common errors, FRRB is talking about common errors in financial statements, QRB is talking about common errors in audit firms, PRB is talking about common errors in firm documentation, and ICI Expert Advisory Committee is talking about various opinions and how to do with various standards. This is the ICI way of audit quality. Why we are discussing at this point of time is, can we bring all these things into a software is what we are going to talk about now. Now coming back again. So generally what we mean by automation, automation is some digitization. Let us quickly run through what we are doing today. Like client onboarding, be it tax or non-tax or audit client, we are using tax apps. There is no single app for all my clients, be that a tax client or a non-tax client. I don't have a single app where I can store all my client data. I'm not having that. That is the biggest challenge. Next, vouching. For vouching, I'm using DMS softwares, data management, then Google Drive, OneDrive, Tally, SAP, and so on. Verification, again, Zoho, Google Drive, and OneDrive. Ledger scrutiny, I use Ledger Vision or spreadsheets or Tally. Again, analytics, I use Zoho One, Google Sheet, or something like. Opinion formation, I may use app sheets and then apps and then spreadsheets. Reporting, majority is done on Word with mail merge and Excel. Documentation, again, we are using apps, Excel and PDF. Compliance practice like Taxman, Computax, Genius, Winman, and so on. Then integration of tools. Now, what we are going to talk today is, how do I integrate all this? If not in other than audit, in audit, how do I bring all these apps onto one platform is what we are going to talk about. Then, so be it, we have seen the international experience on audit quality. I've listed down, we have seen certain defects. Like these are the major defects. Now, whether these defects, can technology handle these defects is what we are trying to talk about, is what we are trying to now move into. Now, what we'll try to do is, I'll just take up one or two of this. Like auditor's independence is what is questioned by our own DC mechanism, call it NEFRA, call it CBI or ED or SEBI or SFIO. These are all the regulators which are questioning the auditor's independence. Can a tool control this challenge? Can a tool control the risk of material misstatements? Can a tool control communication defects? Can a tool control my issues relating to going concern? Can a tool control related party transactions, risk in related party transactions? In the same way, can a tool control the materiality, professional skepticism, sufficient appropriate audit evidence, internal controls, audit documentation, ACQR, final reporting and reporting? These are all the challenges, or these are all the comments that are made by all these, which is affecting the profession as a whole. So what I'll do is, to not to see that I only talk it, I'll pass it on to Mr. Siva Prasad for a while. I'll ask Siva Prasad to just spend a few minutes of his time on auditor's independence, how and what way technology can achieve this. And once he talks about audit independence, then we'll start moving into risk of material misstatement and other issues. So I request Mr. Prasad sir to kindly talk about the auditor's independence and material misstatement. Then I'll step in and then we'll move on to the next level. I'll stop sharing and then I'll request sir to take up.
Yeah, hello, sir. I'm audible, right?
Yes, yes.
Yes, sir. So, Premnath sir had set the tone of the discussion. So he had take us through the various international bodies, regulatory mechanisms, and the increasing burden of both compliance and to prove that we are complying. The second one is very important. Not documented is not done. That is a slogan with which, as a fraternity, we are raised. But then to demonstrate that we have complied with the standards is in fact a very big challenge. And given the time constraints and other resource constraints, it requires a lot of assistance both from technology as well. Okay. So Premnath sir had referred through various smaller tools, utilities, applications, softwares. So a lot of them, which either individually or in aggregate help us in achieving the quality of the audit and compliance with the auditing standards. So in fact, auditing is a very diverse and a serious job. So it requires manpower planning, it requires budgeting, it requires evidence collection, document management, work allocation, performing the audit, and then workflow mechanisms, and then to perform the audit itself, which involves a lot of technicalities. So right from the topic that Premnath sir had initiated, the independence confirmation. So what I feel, in fact, the motivation and what I feel is like, I should in fact refer to one of the slides Premnath sir had shown. Like while the regulator are becoming more and more powerful with the technology, with the artificial intelligence, with the amount of the data at their disposal, with the amount of analytics that they can run and pinpoint where the possible mistake could be. And at the same time, the client, the auditee is also becoming more and more powerful. From a simple standalone applications, the accounting profession had scaled up a lot with lot of ERPs, with multilingual, multi-country, interregional ERPs. Very, very big giant ERPs are there, SAP, Zoho, or other kind of ERPs where not only the accounting function, but also the backyard of that, the purchase order processing, the inventory management. So all of that had been automated and were interlinked into an ERP kind of a thing. Whereas the same kind of a setup is not there with the auditor. He has to still rely on small utilities and then interweave all of them to make it into some sort of a working office. Okay. So the working paper management and the workflow management and the audit management are to gather information and then technically to crunch the numbers and to do the data analytics. All of these things are now not being addressed by some sort of an ERP kind of a thing. Okay. And that is a need of the hour. So we have to scale up to that. There are utilities, there are functions. I'm also, as a profession, we are also mentoring a few things to come up in those lines. So that is required. So those are my initial thoughts before we go into the topic step by step with Premnath ji. So what he said is one, independence confirmation. So independence confirmation is the most essential and one of the vital pillars of the audit. Okay, independence, integrity, and documentation, and then sticking to our technical standards. Of course, it is there anyway. So how do we ensure that the independence of the auditee, of the auditor in a given audit assignment is? So it requires a very detailed kind of a plan. It requires very detailed kind of a plan. And we have to ensure this not only at the time of initiation of the audit, but also at a frequent intervals. Okay. In a sense, if it is a continuing engagement, though the auditor and the staff involved in the audit are independent to start with, and then there could be some certain changes which may impair the independence. Of course, independence is a conceptual thing, but then we are guided by certain regulatory mechanism like having a shareholding, having a position, having the conflict of office. So like this, there are certain technical requirements to prove ourselves to be independent. And over and above that, we have to follow the independence in spirit also. So there should be a mechanism of automation where the audit office is collecting certain declarations from all of the staff members. Okay, just I'll share one such mechanism where it can be ensured. Like, just a moment. Yeah, am I able to share my screen? Hello. Sir.
Sir, screen is not coming. Now it's coming.
So, so this sort of an approach I'm talking about, like as a matter of compliance, what we have to have is we must document the independence confirmation or the appointment or whatever, and we must have the concept of collecting the signatories or the signatures of all the members who are participating in the audit, right from the engagement partner down to the one who is doing the field work. We must have a mechanism of this signatory concept where they must sign up to the report and say that they are independent and they satisfy the technical requirements of independence. So how we can do is like, now there is one sort of a report here. So I'm adding certain signatories here, and I'm adding the audit team to this particular draft, and I can in turn obtain their acceptances digitally here. So which gives us a proof that the auditor had in fact followed the procedure whereby the independence is ensured, not only at the initiation of the audit, more particularly in case of a new assignment and new engagements, it takes more precedence and more priority. Even otherwise, we have to have a mechanism whereby we collect this kind of a independence confirmation or any other confirmation for that matter as a matter of obtaining a digital signature or a signed copy or an email. Of course, the amount of automation in that area, of the most basic thing that we can do about it is to collect an email. Otherwise, it could be good if some sort of this mechanism is built whereby we collect for every draft or for every confirmation, we have a mechanism of obtaining the signatures of them. Yeah, answering the specific question, sir, on Premnath, sir. So with this note, I again give it back to you. So we can take it forward. And so similarly, there are other areas where we can have a mechanism set in place whereby we can automate the processes. Yeah. Yes, sir. To you, sir, Premnath.
Sir, you are on.
Sir, you are on mute, Premnath.
I'm sorry.
Sir.
Yeah. Yes. Sorry. Okay. So I said, well, let me just come back. Now, what I said is, auditors' independence, Shivaprasad sir has demonstrated it in the tool. So in the tool, we need to have the resources that anyhow Shivaprasad will talk about. The resources as If I'm not having a tool, I have a resource list of resources in one Excel. And this documentation, independence documentation template is in a Word. And if I have to take that and put it in one place, then either I use this Word, either a mail merge using the Excel and Word, or without Excel and Word, I'll ask the members to key in the data and take a printout or send a mail. So if it is mail, will it be in the mail, or will I save that signed copy in any folder? So the challenges that we have now here is, it is a separate document. Nothing ensures that I take a printout. Nothing ensures that I put this into one folder. Nothing will ensure except tone at the top, if the firm governance is with full code of conduct, then if they are complying with right spirit, then these documents are taken printout and put into the file with a proper maker and checker. If all these things are not available, this documentation will not happen, rather. And that is what all these regulators are trying to say. But now, contrary to this, if there is a platform wherein the team resources are in one database, the documentation templates are in one on the same platform, so the names will get integrated onto the document, and the platform will ensure its compliance before I start any audit. This is because the technology enables preventive controls. System is enabling. Like today, without PAN number, I cannot log into the system. So in that way, if I have to start it, the system will ensure, unless I have uploaded the documentation related to the independence, system will not move on to the next. This is a preventive control. In that way, we need to comply with, this is what I said here, what is to be documented. I'm very clear here. No documentation, no audit is carried out, even though I have carried out the attest. Okay, what is the documentation talking about SA 230, which is what we are trying to say here, how to automate this total documentation. What SA 230 is saying is auditors' bias for conclusion should not be there. There should be an evidence of auditors' basis. Evidence of auditors' basis of conclusion should be automated. Planned and performed should be automated. Engagement team should be in the list of that automation. And SA 220, like supervision, direct and supervise the audit work, discharge the review responsibilities, engagement team accountability. Then matter of continuing significance of future audits, quality control review and inspections as per SQC. Then external inspections in accordance with applicable legal and regulatory and other requirements. Now, all these things, audit automation should speak. How that happens, let us see that now. So this is what I was talking about, the audit working papers, which is given by the ICAI. And that part is what I'm talking about here in this word. When coming back to the word, quickly, I was talking about that engagement letter. Now, here, topic is a note on the appointment. Now, this has to be initialed, meaning it's a physical document. Now I'm not using any technology here. Should I make this document on the platform and link my client database to this here? Is possible. When this document is templated and stored in this system, wherein I have a client database, this will be automatically picked up. And this date of appointment is also automatically picked up. Then the names here will be automatically picked up here. So, and before And once this is picked up and logged on, the next process will open. Without this, it will not move on, meaning that what the regulator is talking about, that I have not complied with. Now the system is ensuring with a standard template linking to the audit staff masters, linking to the client masters, and with AI or other preventive controls, structuring, system will ensure that it goes on automatically. In this way, whatever document, that 330 pages of document that the institute is provided, it is possible that we can comply with. And all appointment processes, planning, execution, other procedures, financial reporting, completion section, like all these pages boils down to what? All this 330 pages of working papers, templates boils down to template and certain analytics, certain checklists, certain questionnaires, and among all this document should move from one place to the another place. That is document management system. With maker and checker, someone should authorize, someone should inspect, someone should authorize, someone should make, someone should check. So that maker and checker process. And this maker and checker process, DMS moving from one place to another, all these procedures getting carried out, there should be a team, and team is there in that platform. Next, for this team, the work has to be allocated so that the work matrix is defined, and all this has to be documented. So the documentation tool. So in short, what Sivaprasad will be demonstrating from now is about all these processes in one platform. So what is that process? So the audit process is all about risk, engagement risk, acceptance and continuous decision, agreeing to the terms of audit. This is all about SA 200. Then once you have a preliminary thing, then you have an understand and plan with material clauses of transactions, balances, determine the materiality, and carry out risk of material misstatement, understanding the environment. Then identify the risk of material misstatement, prepare a document audit plan, then perform and evaluate, and then conclude. What I'm trying to say is there a tool wherein all these processes, and all these processes are nothing but this 330 pages. And this 330 pages is nothing but templates, analysis, checklists, questionnaires, and so on and so on and so on. All this is this process. Now, whether this process can be into a technology is what we are trying to discuss. So these are certain tools which Prasad will be talking about. So I just leave it to the Prasad now.
Understand. Yeah, yes, sir. So, in fact, Premnath sir had touched upon multiple areas. So it's like covering the whole of the audit. Audit is a multifaceted function. It includes data analytics. It includes sampling mechanisms, which are statistical or non-statistical in nature. And there is a process of work allocation. There is a process of gathering evidence and then organizing the evidence so gathered in a proper way, so that the findings get escalated to a logical conclusion. They were given to a logical conclusion. And then there is a reporting which in itself is a very big challenge or a very big chapter of its own. So which requires a lot of tools like drafting tools, where we will be using a lot of dynamic text in our drafting. We will be using a lot of numbers which come from the audit notes, which come from the financial statements. So it is our duty to ensure that they stay intact and they are in sync with the working papers. So therefore, there are multiple areas which requires to be handled in the case of an audit. So let us take them one by one. There are multiple tools, and the tools are happening now. So without going into the name or the exact this one of that, there are multiple technologies, so which I'm demonstrating a few now. So first, let me talk about the automation part of the audit planning. Audit planning itself is a very crucial step. So auditing standards, SA 200 requires us to that the planning has to happen in consideration with various factors like the constitution of the entity, the regulatory mechanism which the entity is guided by. So to what extent we can automate an audit? So automation of audit requires lot of evaluation, lot of evidence gathering in the planning stage itself. Okay, so let me share my screen and yeah. Now, when I talk about audit planning, so audit, in case of audit planning, we must have the regard to various factors, which includes the certain parameters like the share capital, borrowings, etc. Based on that, we have to perform certain checks. So like, for example, there are multiple decisions. Let us take an example of a statutory audit of a corporate audit, statutory audit of a corporate. And we have to ensure, we have to evaluate whether the following, whether the independent director is applicable, whether the nomination and remuneration committee is applicable, whether women director is applicable, whether CARO is applicable, which accounting framework is applicable, Ind AS or an accounting standard framework is applicable. So there is a lot of scope to automate on this area. So I just demonstrate here, there are multiple decisions ranging, just for example, I have taken 6 of them. So all of these decisions are automatically evaluated by the system, and the system will draft an audit plan on its own based on very few facts that we supply. You can observe all of these corporate social responsibility, CARO, internal audit, nomination and remuneration committee are at present appearing to be no. Now, these are decided based on a few set of facts like turnover, paid up share capital, outstanding, the nature of the entity, the constitution of entity, whether it is listed, unlisted, public or private. So once we change or once we supply the system should be intelligent enough, or the tool can perform this. And let us say I'm changing the type of the company from private limited company as it exists now to a listed company. So then automatically the decisions have to get evaluated again. And you can see the list of decisions are automatically evaluated, and they are turning to be yes. And the system should be intelligent enough to chalk out an audit program based on these decisions. So that is next level of automation. So because the CARO in this particular case is applicable, the CARO checklist, the CARO disclosure checklist, and the CARO report should be pulled into my audit program. So let me go to my audit program. And in the audit program and permission section, we can see that all of those CARO and the independent director, all of those checks have been pulled up because of the facts that were supplied. So as little as 10 to 15 facts, certain financial, certain non-financial. So these non-financial and financial facts, based on them, we must be in a position to draw up our audit plan automatically. So thereby the risk of missing out something at a planning stage itself is arrested. Okay. Apart from that, there are also facilities like you can borrow from a template or a master pack, or you can borrow from a neighboring assignment, which was recently done, so that the work of the repetitive work was avoided. So if I say I'm borrowing from a template or a master pack, and I borrow from a statutory audit template or a tax audit template, so what the system should, in this particular case, this particular setting, what it is doing is, so once I hit my statutory audit template, it is borrowing a set of audit steps right from the planning stage to assessment of risk to initiation to performance and then to reporting. All of those steps are drawn into my audit program automatically. So that is how my audit program is drawn here at a single click. What it is doing is, so it is evaluating certain facts, which one again converted into a decision, which in turn is drawing up my audit program. So it's a data-driven approach for the audit planning, and the audit plan is automated. And automation has 2 steps. 1, the way we automate the process. 2, the way we can reuse the process. So here, when we borrow this template to another particular assignment, so what we are doing is this particular ABC Limited, I'm using it for another assignment. So thereby it is another step of automation where we are avoiding a repetitive task. Okay. So, and the next one is important aspect that our audit working papers and Premnaji had pointed out is a bias of the auditor and the sample selection. Okay. So how do we select a sample, or rather, how do we document the way we selected a sample? That is very, very important. So there are certain standalone analytical tools which we can use. So they are good at crunching huge volumes of data and then going into that stratification or Benford law or then random sampling and then reaching out to that particular lot of transactions which require more of our attention. Okay. That is one part of the story. And then documenting that, say, for example, we can use Excel very well, and then we can filter out based on certain parameters and we can reach out to our audit sample. But the real problem is how do we document the way we reached out to the process? That is very important. Okay. So let me go through and demonstrate certain. So here I have collected the data. So by various sources, I had collected the data. And as an example, I'm having, yeah, just give me a moment. So I'm taking my fixed asset register. So there are a lot of data that was collected. Now then the auditor had to perform certain analytics in order to pinpoint the way or to pinpoint the transaction which requires an audit attention. And there is no one sample that is good for every aspect. Say from the side of impairment, because I have taken fixed exam, from the angle of impairment, certain items could be important. From the aspect of capitalization, certain other areas could be important. So therefore, the sample has to be driven contextually, and for every reporting requirement, for every disclosure requirement, we must have a different sample, possibly. Okay. And there are multiple approaches, like we take one sample and do it an end-to-end, or we take context-based samples. It is, of course, a professional judgment that has to be taken. Now, how can we use technology in this area? Now you can see on my screen, there are certain transactions ranging 1 to 1,000. Okay. Now what I can do on this is I can do sampling, I can do filtering, I can do stratification, or I can do whatever. So I can run a query and I can pick out from the vendors where all the vendors containing limited. So the system is fetching me all the transactions that contain the word limited. And you can also see the log happening simultaneously. This is very important. Okay. Normally what happens is we are able to, or the audit community is doing a lot of analysis, but then how that analysis is done, whether the analysis is fair enough, and we can in a position to demonstrate that we did proper amount of analysis to prove that there is no auditor's bias, and to see that the audit risk was comfortably reduced down to an acceptable level. So that is where, if at all the peer review or the quality control board, QRB or the NEFRA comes up, that is what we have to prove. Okay. And the approach is how do we reach out to? So you can see here on a log from out of 1,000, when I have applied a filter, I have reached up to 54. Now, if I further funnel it down, like from the category of assets, maybe as something like building. So it will further funnel down the transaction story to 6. Okay. Now, out of these 6 transactions, which I have reached out, can I record this log? That is very important aspect that we have to take care of. So there should be a facility, or we must be in a position to save this for later usage. So let us say if I am saving it out and I'm giving it a tag that transactions from corporates, some tag, I must be in a position to save this for my future reference. So this is my analytic log, which I can use it for my future. And this saved log is also getting documented automatically. Okay. The documentation should be incidental and it should be real time. Otherwise, it is very time consuming and it will be theoretical. End of the day, it will be very difficult for us to document, because post facto, it is very difficult to document. Now, the most crucial part of this is, having selected a sample, I must be in a position to execute certain audit test on that, audit aspect, audit tools on that. So let us say I have somehow come up to this sample of 6 transactions. Now, on these 6 transactions, I must be in a position to apply my audit tools. So audit tools are like how the audit working paper template released by the institute says. All the tools can be categorized into either a checklist or a questionnaire or a form or a calculation or a compliance against an SOP. So these are the various, or a physical verification or a balance confirmation. So these are the various audit tests that we perform: inspection, observation, inquiry. So what our audit evidence says. So those are the audit tests that we can perform. So I must be, as an ERP, as an integrated technology, we must be in a position to allocate on this selected sample the required audit approach. So on this, let us say I'm putting up, scoping them to a particular checklist or a questionnaire. So from out of checklist, I'm saying general purpose verification of, and I'm also allocating my maker and checker. So who has to perform this? So in this case, I'm putting it up to few names who has to perform. So this is the intermodular connectivity. So the analytics, the allocation of the work, and then the calendarizing it, putting it in a chronicle, and then allocating it to certain people. If all of them are integrated into one, that is where the real benefit of automation can be harnessed by the profession. So once I scope them off, automatically the work should flow to the respective people, whoever is or to whom it had been assigned to. Okay. So that is one part of the story. Apart from that, we will also be requiring multiple advanced statistical tools, if required, to crunch the data and to have a proper sample. Now there are 1,000 transactions, it could be more than that. Now I have to see the concentration and spread of the data. So where from my data is spreading out. Okay. By the way, I'm happy to share that, or rather I must say here, data science is going to be the future, undoubtedly. And what we were doing in Excel or what we were doing in the past in a very basic style, they are being automated in a big way. So I did my data science program with ISB, Indian School of Business, and the way the AI, artificial intelligence, machine learning is happening, the robotic process automation is happening. So it's like there is no room for traditional, or there is no room for our conventional way of selection of a sample. The whole process is getting transformed. So that is on a side note. Now, if I want to see the whole spread of the transaction, so I may be requiring to stratify the data across a cross section, like cost of purchase of this particular given data. If I want to bucket it, put it into boxes, 10 bins. So if I am putting it in 10 bins, I must be in a position to see how the spread of the data is. Now you can see here, the concentration of the data is more on a lower strata. Okay, is very high on very low on a lower strata. The data is very skewed. And by hitting down on any one particular bin, the system is taking me into that bin, and thereby I have going to a particular transaction level, and I may select this sample. So once my log is saved, tomorrow I am in a position to prove to any regulator the way in which I have selected a sample, and that is free of professional bias, and that had catered to see that the audit risks are reduced suitably down. So this is one sphere of automation. As I said, there are multiple spheres of automation. Audit is a multifaceted function. At the cost of repetition, I'm saying. So the automation of the planning and the automation of the data analytics, and then putting it into a sampling mechanism and thereby work allocation mechanism. So that is altogether a different sphere. Okay. Similarly, there could be usage of more statistical mechanisms like random sampling by various algorithms. So here I'm taking out a random sample and I'm instructing the system to pick me a sample of 10% of the transactions from each of the category of assets. So now my question is to the system, from each category, whether it is plant and machinery or leasehold lands or building or land. So go there, read the total data and pick me up 10% of the items as a sample. Okay, so the system is doing, and it is generating a sample. So you can see here, the system is generating 100 transactions as a sample, and there is a representative, it is a representative sample because the sample cuts across all the categories of assets, and it had picked up 10% as sample. Okay, so now I can document the same as a methodology of selection of my audit sample, Okay, and I can document it. I can document it by saving it to the log. Okay, and I can perform any analytics over that.
Hello.
I just had covered. Yes, sir.
Sorry, I'm interrupting. I just want to interrupt for a minute. Mr. C.N. Jambusaria, sir, President of SAFA, has joined us. So we want to welcome him, and so we'll take a break of 5 minutes.
Yeah,
So
yeah,
we'll-
most welcome, sir. Namaste, sir.
No, namaste.
Happy to
But-
see you, sir. Thank you.
But if you are in the middle of something, you may finish after that. Whatever
No,
way.
sir. Nothing like that, sir.
Okay, can I interrupt? So I'll just see.
Sir, we want to welcome Jambusaria, sir, and everyone knows he's the past president of our institute, and currently he's the president of South Asian Federation of Accountants. C.A. Jambusaria, sir, is a qualified chartered accountant of 1984 batch, and he's now practicing for almost 27 years. He is also the member of professional accountant in Business Advisory Group of International Federation of Accounts. He has had many, he's been also member of very important committees constituted by Indian government and regulators relating to policy formulation that include Government Accounting Standard Advisory Board and Audit Advisory Board, both of which are being constituted by the CAG of India. So I request Jambusaria, sir, to address the participants.
Thank you so much. And today's speaker, chairman of this committee. And let me at the outset appreciate all the efforts of the Digital Accounting and Assurance Board to acclimatize all our members with the technology, and particularly today's topic is so relevant that in the past few months, whatever orders were received from NFRA and whatever perceptions have been drawn from the audit reports, I think today's webinar is of utmost relevant that we make audit absolutely effective through technology and try to use it in such a way that we are able to plug as many loopholes in our audit process as possible. Particularly today, the complexity has so much increased with the data volume, and technology and automation has taken over so much that if the members learn this effectively and apply it, probably their audit risk will come down as much as possible. Although it is not possible to make the risk zero, but at least it can come down substantially, and the speed of the audit can also go up. So with that, I don't want to really say so much because in every webinar I come for some time, and today's topic being so relevant that I was feeling it very awkward to interrupt in between, but I had another session of myself on taxation and I could not postpone it. So I said that as soon as my session is over there, I will join, and if time permits, I will address the participants. My only message to all who are in the field of auditing is that please see that you secure yourself using technology fully and applying all the risk tests and insulate yourself as much as possible. So today the speaker will highlight all the risk areas and the ways in which automation can be used effectively to carry out audit in as much risk-free manner as possible. So with that, I would once again hand over to the speaker, and my apology for interrupting in between when the session was going on. Thank you so much.
Thank you, sir. Thanks for the encouraging words, and over to you, sir. Sir Prasad, sir.
Yeah, sir. Very nice to hear you, sir, and thank you for taking out time. And yeah, Premnaji, I had discussed 2 areas: one, automation of planning, and 2, automation of sample selection and putting it to the onward field work, whether it is vouching or whether it is putting it to a detailed testing. So shall I continue with the other areas, or you will? Sir, you are on mute, sir.
I'll just connect to a few things and then you can take over.
Okay. Okay. Okay.
So again, these are the risks that are identified by the regulators, is what we're talking about. So you have rightly covered about the area of materiality with respect to selecting the sampling you have talked about. So there are many areas where these regulators like NEFRA, CBI, ED and all were talking about, we lack professional skepticism. So the professional skepticism comes out of deep data analytics and defining the red flags. Like say, for example, if current ratio is more than 2, and if more than 2 current ratio talks about more of the current assets. Yes, in that more of the current assets, how much is realizable? Now we need to dive deep into it. If say that the debtors expected credit loss, if you talk about Ind AS, if the debtors are outstanding for more than 6 months and the stock is not moving for more than 6 months or 1 year, obsolete and slow moving stock will also give rise to a higher current ratio. So what is the red flag? In what the red flags that we can define based on the aging analysis of debtors, aging analysis of stock, will automatically read with the debtors with the current ratio and debtors turnover ratio and stock turnover ratio, and then it will immediately give a red flag where which areas to be carried out. I think this can be, whether this can be automated in the system, what if you can demonstrate, that will be very good if possible.
Yes, sir.
If not from the sample, if not from the stock
So you
point
breaking.
of view, is there any other way where you can develop?
So it's breaking, sir. I couldn't get you properly.
What I'm saying
You
is,
repeat once.
if not from the inventory point of view, current assets ratio point of view, is there any way where we can define some red flags and where those red flags are reached, and what procedures and how do you go dive deep into further analysis? And then mark a comment and see that comment is traveled to the CARO or to wherever we are trying to do it. Otherwise, what happens is my staff or the audit managers who carry out certain procedures independently in one Excel sheet will not travel back to where, when I'm trying to finalize my CARO reportings, nothing ensures except maker and checker, nothing ensures that the comments or observations made at the lower level will travel up to the higher level.
Yeah.
So whether the technology can be used in structuring or connecting the observations to the report. If you can demonstrate how technology can be used, that will be fantastic.
Yeah. So that is a trial, sir had said, and that is another very, very important area, most problematic area, most challenging area. The audit findings will come from different sections with a differing frequency, with a differing intensity. Some needs to be, some may not carry the waters and then maybe have to be dropped. And some had so very important that they have to be considered at a later stage for qualification or emphasis paragraphs are to be reported in CARO and all. So the life cycle management of the audit findings is very, very challenging area. Okay. In fact, let me, I have to jump one thing. When the findings will come? The findings will come when the field work, to borrow from the slide shown by Premnath ji. So from the planning, the next comes the execution. From the execution, next comes the finding stage. Okay. So when we plan out the audit and ask the team to perform certain tests on certain audit subjects. Okay, like whether it is taking stock of certain things or evaluating against the given checklist. So it gives a rise to certain findings. So let me take a deep dive into the substantive testing as such, then go into the audit findings. How do we manage the findings and list them up to the final audit report?
Yeah.
Okay.
So without forgetting the red flags definition, if possible.
Yeah, exactly.
So that's very crucial today.
Exactly. So just to start where it was stopped. So from the number crunching, it could be fixed asset register, sales register, day book, or whatever the discrete data that we get from the auditee. After analyzing, we may come up to certain samples, and all of them were routed through the substantive testing. Okay. So in the substantive testing or the test of details could be on any type of transactions, and there are multiple ways to do that. Checklists is one powerful way, questionnaire is one powerful way. Typically, both are one and the same, except for the fact that checklist ensures or elicits an yes or no answer. So it is more like ticking exercise where we use it at the start of the audit or at the end of the audit to ensure that what is applicable, what is not applicable had been properly done or not. Questionnaire is a more detailed, descriptive way where we elicit the information in a descriptive style, and we'll collect the data in a descriptive format. And then we may also go for balance confirmations in case of payables, receivables, and balances. We may go for physical inspections. We may go for third-party verifications. And we may also go for annexures or compliance calendars to see that the transactions are in order. Okay. So most powerful tools are checklists. So when I take up a checklist, like a general checklist for verification of fixed asset, if I take it up, okay, these are my samples that I have already selected. It could be a manual selection, or it could be an automated selection, or it could be a very, very powerful analytic driven, like from Python, you may write a program to pick up most or the anomalies or the cluster, whatever is not going well. You may have a pattern detection kind of AI driven pattern detection. Whatever is the final, whatever is the step, the final goal is what to do on that particular sample so selected. On the sample so selected, the auditor's interest is to perform an audit test. So here I am just performing general checks on verification of fixed asset. Okay. Now it is not a monolithic exercise. Rather, it is a transaction. It is an exercise with its own consequences. Say, for example, there are a check like in the general purpose, whether there is any sale of fixed asset. So if there is any sale of fixed asset, my system should be capable enough. To pick up a consequential checklist. So if there is a sale, how that sale had happened, whether the depreciation is calculated properly, etc. Similarly, if there is an impairment, automatically the system should be capable enough to trigger the consequential checklist or the consequential audit step.
These are all basics of AI coming into this.
No, sir. It is in fact not AI. It is rule driven. AI is when it is not rule driven.
Yeah.
Okay. So whatever is powerful, of course, it appears like artificial intelligence. Okay. But from a technical standpoint of view, here in this case, if you say whether there is impairment and I answer it as yes, this particular item will get replicated with impairment checklist again. Now, if the impairment is so high that the going concern concept itself is impaired, the system will generate an going concern checklist automatically. Okay. So this automated triggering is not because of artificial intelligence, but because of a rule-based formula that was written. Okay. So if it is not by rule-based formula, by a big data, if the system is doing on its own, then we call it as AI. So there is a small technical difference between what is a rule-based or SQL-driven or a rule-driven, data-driven approach versus an artificial intelligence approach. Artificial intelligence is where we are not writing any rule and the system is automatically developing a rule on its own. So that was a small technical difference. Anyway, the point that I want to impress upon is that the moment I say whether there is an impairment and the answer tends to be yes and the approach is approved, then what this system is doing is, in an integrated manner, it is triggering up another checklist. Okay. Now, if you go there, there is another checklist by name impairment of assets. In this case, it is an AS driven company. So in the AS driven company, that particular subject had come and fallen in this particular test automatically. Okay. How the system had known that it has to be tested for impairment? Because in the initial checklist, it showed a signs of impairment. Okay. Similarly, if I say if there is a sale of asset, then automatically the respective concept of if there is a revaluation. So whether the revaluation is proper or not, whether it is in accordance with the standards, there is an upward valuation or a downward valuation. If there is an upward valuation, then is it covering up the earlier downward valuation or not? So all the consequential checklists are triggered automatically. Now coming back to the question that was exactly raised by Premnath sir, how do we raise an audit finding or a memo? And how do we have a life cycle around the audit memo? That is a very big challenge, because a lot of times these memos are written on a manual scribbling pads, or maybe they are Excelized and then put it in a form of a mail to integrate them, to have a cross section of those audit findings across various things. Like we may have to go by balance sheet, like all memos that are on a particular line item of the balance sheet, like PPE, or items which are red flagged, which are having an high risk, all findings that are not yet closed, all findings that have an adjusted and an unadjusted impact that has to be given a consequential treatment SA 450. So like that, the memos have the life cycle management of the memo is a very big challenge. Okay. In fact, what happens in case of quality review boards and what happens in case of a review mechanism is, it is not an unidentified mistake that is a problem or a risk. It is an identified mistake in the audit notes that was not given a proper treatment. So that is going to be a real danger for the audit. Okay, because that proves against the very mechanism of the audit or the very mechanism of the processes implemented. So therefore, every finding that had come up should find a logical conclusion. Now, let us say against this particular question, I just want to raise a memo. Okay, so significant changes are adverse in technological, market, economic environments, so that could have an impairment. So here, there are certain facilities where I am raising a memo straight away. So if I raise a memo from here, okay, and I'm able to raise a memo, the system is automatically generating, system is automatically transporting me to a screen of raising a memo. So here I am raising a memo saying that there is no suitable provisioning. And there is under provisioning of. Now in this case, it has to be flagged appropriately because that saves on our time. So whether on a side of a ranking, it ranks low, moderate or high. So if it is a high risk transaction, then it has to be suitably escalated. So this is one way. And the second way is normally the memos are raised, the findings, the initial findings are arising from the field work that is being done by the audit staff. That is the first level of test that the audit as a team or as a function perform. So therefore, they must be escalated properly. So there should be a proper submission to. So it is submitted to a particular person. So what happens is it had become flagged to that person. So it becomes his responsibility to have a consequential response or finalization of this. Okay. And the most important aspect of this is the ultimate result. The whole audit culminates into giving an audit report. Okay, so finally it is the report that is a culmination of the whole of the audit efforts. So therefore, finally every memo shall be mapped to a particular draft or a report that the auditor is going to give. It could be CARO, it could be 3CD, it could be LFR in case of bank, it could be ICOFER, it could be even a draft that is being given to TCWG, those charged with governance. It could be any deliverable of the audit. All the findings should be properly routed through the ultimate deliverable. So here what I am doing is I am linking it to a particular report. Let us say I'm linking it to CARO and I'm giving to paragraph 3(1)(a) just for the sake of example. So now this is, you can see the bridge. So from a data sample, we are filling up a checklist. From the filling up of a checklist stage, we have raised a memo, and from the memo stage, we are linking it to the report. So what happens is, just like in an accounting package, there is a way to traverse from a initial journal entry to the ultimate balance sheet, and we can have a drill down or a drill up. So we must have a suitable audit ERP in place, so whereby we can travel from the ultimate report to the first finding. Okay. Now, if I click on this and go to the report that was linked in this particular case. So if I'm going to the Caro 31A, I'm getting straight away transported to that particular paragraph of the Caro. Okay. And I can also see all the findings that were recorded by various people on that particular. Now, this is one memo that I have raised. So therefore, this gives us a trial, an audit trial. So where there is a clear-cut mechanism or a pathway laid that each finding had reached its logical conclusion. And not only that, we can also filter our findings in various particular ways. Now, if I go to my memos, so these are the various memos that are raised. So these are raised by few makers and checker. You can see the maker and checker of the audit memo. So each memo had a maker and a checker, and because it was put up by someone to someone, and they are having multiple consequences. Some memos are getting reported, some memos are having a rectification entries happening, some memos are flagged to the financial statements. In that case, we have to see whether there is a breach of materiality or not. Okay, now I can filter out, or I can play with my audit findings in any particular way, like based on ranking. So if I want to see all the memos of a high ranking, so these are the memos that are ranking high. Or if I want to see out of the high ranking, what are not complied. So these are the almost everything is complied in this particular case. Now complied and closed. So these are now if I want to see who is a maker of that, raised by whom, raised on whom, and whether it was finalized or not. So if I say not finalized, so these are the memos. I'm just filtering out my memos. So, and what I'm saying is, out of all the memos that are there, raised by all the departments, by all the audit staff. So if I want to filter it down on my memos and see the high ranking memos which are not complied so far, which were not finalized by the audit partner or engagement partner, I'm in a position to see all of them. So if I want to finalize any one of them, now the most important part is finalization of a memo, finalization of an audit notes. So in what way we can finalize an adjusted and unadjusted misstatement? So there is a auditing standard 450 which guides us on that. So whenever we get a memo, we have to check if that particular finding is an one-off memo, one-off finding, or a pervasive one. Okay, so let me go deep into this particular memo. There is no suitable provision. So I'm going into that. So now this is the response and finalization screen of the head partner. Now he is flagging it off and saying whether it is one-off or pervasive. So if it is pervasive one, it is more systemic in nature. It is having a far-reaching implication, and it requires a detailed audit methodology. Whether if it is a one-off, if it is clerical, if it is less likely to repeat, then my remarks and the way I can conclude is different. So similarly, when I look at a memo or a finding, what I can do is I may decide to report it in my permanent file, or I may decide to put it in my current file, or I may decide to put it as a matter of emphasis in my ultimate audit report, or I may go for a qualification, or I may roll forward it to the next assignment. So this is exactly the life cycle, the handling of audit findings. Okay, it is not straight cut because there are multiple possibilities. Now I may redefine my materiality that was already defined. So what happens is, because of this memo, I found that there is a performance materiality issue in one particular given area. And the auditor may decide in his this one to redraft the nature and extent of audit procedure, and he may decide to change the materiality. So what happens is, if we redefine the materiality from here, because materiality or the audit plan is not a static subject. Okay, it's an evolving one. So it evolves through the cycle of the audit, and when the audit is getting done, the auditor may decide to go back to the planning stage, to go back to the drawing board and redefine the materiality if required. So in every memo, the auditor in his options panel, so there is one like changing the reporting materiality, or changing the report materiality as such, or disclose it in a report, whether the report could be Caro, or at times what happens is one finding may be reported in multiple paragraphs of the same report like Caro. So maybe it becomes reportable in 3.1a and 3.1b also simultaneously possible, because there could be an overlap. It could be a related party transaction in property, plant and equipment. So it becomes reportable under multiple paragraphs of the CARO. So if there is a mechanism where we can flag these reports to the ultimate deliverable of the audit, it becomes very easy, and we are building a trial, exact trial with a drill down facility. Okay. And it could also get reported to another report altogether, not necessarily CARO. So maybe it becomes also reportable under 3CD, and under 3CD, it could go to any particular paragraph. So if I select and then pick it up to that or flag it to that particular paragraph of that. So now here, what I'm exactly doing is I'm taking up one audit findings made by one of my audit team, and I'm finalizing this by giving an appropriate audit judgment over it. Okay, with minimal time involved. So then what happens is, this particular one, is there a suitable provision? This appears in multiple places to all the reports that are tagged. Now, if I go to tax audit report and see this 30A, there also this finding is appearing. And if I go to CARO, another report, that also it become. So thereby it becomes very handy for the one who drafts the ultimate report. Okay. While this is one part of that, there is another part that was touched upon, that is materiality. Okay. So how can we define materiality, and how can we ensure or evaluate whether there is a breach of materiality or not? So that becomes very, very important aspect of the audit. So just let me take a few steps back and go to this definition or a planning stage. So whether when I am drafting my financial statements itself, so I must define my materiality. So how the SA 320 guides us on materialities, the materiality has to be defined suitably. So there are multiple factors on which we can base the materiality, like is it a capital intensive unit or it is a revenue intensive unit. So if you take software industry, it may be lighter on its PPE, but it would be heavier on the current asset and heavier on turnover. If you take a very gigantic manufacturing unit, it is very high on its balance sheet. Okay, and the profit, the fixed asset turnover ratio could be a little down because of the huge fixed asset outlay that they have. So therefore, the P&L materiality and the balance sheet materiality, the SOPL materiality and the balance sheet materiality could be different, and it could be different. It could be defined differently. So now in this particular case, the balance sheet materiality and the P&L materialities are defined based on suitable factors, like they are defined on sum of assets and liabilities and certain percentage, 1% or whatever is taken as a definition of materiality. So this becomes my important documentation, the way I have defined the materiality. But this is smaller part of the story. The bigger part of the story is, of course, as a convention, as a ritual, as a good process, the materiality is defined anyway. But the real problem is, are we having a watch on all the findings and aggregating them against each line item of the balance sheet and ensuring if the materiality is, or if the adjusted and unadjusted misstatements are within the materiality or they have crossed the materiality. So that is where automation will come to our rescue. And that is a very tedious job to say. Defining materiality is okay, but then having defined the materiality, we must have a watch on each item to ensure that at an individual, what the auditing standard says is at an individual level and at an aggregate level. So we have to ensure that the adjusted and unadjusted misstatements are within the limits, both at an individual level as well as at an aggregate level. And the way or the level at which it is to be aggregated, that differs on a case-to-case basis. Now here I have defined my materiality like some few thousands for P&L and few thousands for balance sheet. You can see here they are defined differingly. Now if I go to my financial statements and check against the misstatements that are found, now here I am able to see the total of the adjusted and unadjusted misstatements in every aspect. And whether they have breached the materiality. So wherever they have crossed the materiality, the system is alarming us in terms of turning them into red. So which means that there the sum of the misstatements have crossed the materiality. Okay. Now where from this the system is picking up this? Okay. Again, if it is in a well integrated system, what happens is the moment I raise a memo, at the time of raising a memo itself, so let me take one example in this non-current liabilities. So there is a unadjusted misstatement of 10 lakh, but still it is within the definition of the materiality we already had at a planning stage. So now what happens if there are certain more memos? Automatically it will cross the materiality limit, and then the net materiality it will automatically turn into red. So I'm putting an unadjusted misstatement of 13,50,000 against item land and building. Okay. Now what happens is, so if I go back and check against the same item of land, because in this particular case, it is more than the defined materiality. It is more than the defined materiality. I'm not putting it to, yeah. I put it to plant and equipment, sorry. So here, in this particular case, the total of the unadjusted misstatement, 13,50,000 is crossing the materiality, therefore it turned into red. Okay. And it is also important that we record our findings there itself. So wherever it is crossed, so we may say the matter had been emphasized, or we may say that it requires a qualification. Premnath will present on the various qualifications, the various kind of reports that were possible under SA 700, 705, and those series of auditing standards. So therefore, the life cycle management of audit funding is very, very important. More particularly in case of multi-location or in case of audits that spread across multiple divisions, it is even more cumbersome and challenging. With multiple team in a collaborative audit style, it becomes even more challenging. Even at an individual or a standalone basis, we have to ensure that each memo that is recorded is given a befitting treatment, and we have taken proper care to see that the audit risk of that particular finding is properly taken care, whether by suitable reporting, and the reporting could be anything. Okay. So I wish to go into the internal control evaluation and all, but then cutting it to the question that was raised by Premnath ji. So I'm just stopping it here and giving it back to sir. Sir, back to you. I have covered on life cycle management of audit findings.
Right. Yes. Yeah. So again, yeah. Then let me come back to. Yeah. So we have touched upon auditors' independence and the risk of material misstatements, where we talked about industry-based, and then we have seen the questionnaires, we have seen the risk assessment. Then you'll again look into the internal controls point of view, where we have done the data analytics to identify the patterns, and then etc. Then going concern is again based on the standard ratios, like we have seen now the ratios, if it is templated, if it is standardized, and the system itself will highlight like what we have seen, the risk materiality is taken, and then it has taken about. Okay. Then for all these things, the biggest challenges, as many of us are into tax filing mechanism now, habits die hard. The point what I'm making here is habits die hard. The habit is all along my income tax filing, what I'm doing is I'm going into some tax tool like Genius, Winman, Sinman, Taxman, and so on and so on. And then I simply download, or I simply call that data from AIS or 26AS, and it goes and sits into respective brackets, and the calculation is automatic. The tax planning, the tax payment is automatically adjusted, and finally I get some. So if my profile of practice is 90% is taxation, so my habit is that the data should automatically come into my tool, and tool should calculate. So in that way, audit is entirely a different process where numerous set of functions has to be carried out as per various standards. And since my habits die hard, I would always expect some tool where it can automatically dump the data from APIs or whatever it is, and the rest of the things should move on automatically. That is not possible. But however, having said so, how the biggest challenge we face is how do I bring data from Tally or SAP or any other into my database? And another challenge is where we are seeing another challenge made by the regulators is that the financial reporting, like Schedule 3, Division 1 or Division 2 or whatever, many a times the comments are on the balance sheet, it is noted as fixed assets, whereas it should be property, plant, and equipment. Such a minute things the regulators are moving into. So there should be a standardization on the platform, on common platform what we are using now. Like the Winman, Genius, or Taxman, or Computax, or whatever it is, what we are using, all the forms like ITR 1 to 7 has been standardized. So whether automation can be done in standardizing Schedule 3 and notes and so on and so on. If so, can you kindly demonstrate how is it possible with bringing the data into the tool?
Yeah, yes, sir. So the thing is like, how can we organize? How can we organize and then how can we bring the reporting and the audit variables, if we can say the proper definition, what I can fit in for the question that Premnath had said is like audit variables. Like the tools so referred, like the tax computation tools, they help us in preparing the statement of total income and the adjusted profit and loss, compute the tax, and they also facilitate in generating the JSON files in a required format and upload it to the portal directly, so that we are not burdened with that aspect of generating or technically converting the Excel files into JSONs and all. But then for us to fetch the data so required into that tax filing, what we again require is the same audit finding management system. Okay. Like when I am doing a transactional audit, or I'm going a transactional verification and going through each of the transactions, then I may come up against certain disallowances or allowances. Okay. So I have to group them up properly, and I must have a proper working paper management on that area to ensure that all the required disallowances or allowances that are to be given a proper treatment, whether it is under income tax or GST, are properly aggregated. Okay. So how can we do that is a present topic of discussion. So again, I'm going back to the same thing. While I'm raising a memo, what I did is when I am adding an impact, so this impact, the adjusted and unadjusted amount, or the impact is against any particular given impact. Okay. Now, I can add certain income tax allowances and disallowances under this particular head. Now, let us say this is the disallowance under section 36(3), maybe on interest or something else, or it could be an interest on 43B for statutory payments. So the moment I found out at the time of doing my vouching itself, if I am able to raise a memo and say that my 43B disallowance, there is an amount of rupees 1 lakh found. So this is 143B disallowance against this financial transaction, maybe revenue from operations, or it may not from revenue from operations. So from interest expense, from this ledger, I have found out a transaction, and I'm recording it against the head 43B disallowances. So what happens is the system is aggregating them up all. Okay. Now in another memo, if there is another 43B disallowance, I must be in a position to aggregate all of them. So if I filter it out by impact, now the system is giving me a categorical report of all the 43B disallowances. So you can see here, there is a 43B disallowances. This is a total. This becomes my working paper management. And what happens is I can punch in this into my tax computation tool or the direct utility. It could be GST or it could be income tax compliance. But for that to have an underlying record, the aggregation and the working paper management can be automated. Now, what happens is, as a forward step, if this is linked to the tax tool through some API, okay, that will be even more better. So that my working paper and my recording 143B disallowance will automatically have an impact on my statement of total income, and it will automatically get reported in an ITR. Then it will be even more powerful utility. So for that, what I have to do is, from this particular, whatever is an ERP kind of a thing we have here, we must talk to them and see that those ERPs talk to each other through some API interface, so that it becomes even more easy. Now, let us say there is 1 lakh of 43B disallowance, and another student or another person, whoever is performing, is recording another 43B disallowance, let us say. And this time it is like 2,50,000 coming from some other expense, rents, taxes and buildings, etc. So by this, I have a way to analyze where from my 43B is coming. So if I summarize by impact and go to 43B, the total of the 43B disallowances are 3,50,000. And they are coming from various ledger accounts reported by various teams. If I have a click on them, there is a drill down facility. I'm sorry. Something got struck. Just. Yeah, so that way I can have a drill down of them across ledger accounts, across people who have raised, across their compliances or non-compliances, etc. And soon, definitely, we will witness a day where there will be a seamless integration. If I raise a memo, it will go and sit in my ITR, and it will also get reported to the whatever the GST return or income tax return or ROC returns. So soon, the day is not too far. The way the technology is happening and the rapidity at which it is happening, the API-based integration between the systems. So this becomes the porting, what you call in technical term. So this becomes the terminal port of the terminal result of the work that was done, which becomes an inward flow to the next tool or next software. Okay. So if we can build a seamless flow through that, then it will solve that problem also, what Premnaji had said. The documentation, the lifecycle management had been taken care here. And hope that hope I could throw light on the question that was raised.
That is one issue. Then how do I integrate my data from accounting system into an audit tool so that the financial statements are as per the framework of Schedule 3 or whatever it is?
Yeah, there are multiple ways in which it can be done, sir. There are multiple tools also on that. And what happens is it depends on the accounting package also. Not all packages allow the data to be exchanged, because in that they are revealing their schema. So what certain ERPs do is they give an API-based application program, the interface-based data exchange, so that they will give certain reports which can be directly linked. And we may have an API-based or a direct upload and a download-based approach. So there are multiple ways in which it can be done. So let me, I have 2-3 things in my hand to show at that this one, but not comprehensively full. Now, this is a accounting, these are the financial statements that are drawn automatically. Now here, there are two ways in which it can be done. One, we can upload the trial balance or a daybook through an Excel mechanism. Okay, so for that, what we have to do is we have to download the data into Excel format and then upload. That is a little risky because there could be a lot of validation issues. There could be missing rows. There could be irrelevant data. Like if you download the data from Tally, the date column is not continuous. So there will be certain problems in that area. Another way to deal with is having a JSON based one. Now here, there is a Tally JSON import or Tally JSON export. So what it does is we can download the Tally data in the form of XML or JSON and then upload it here. If the system had proper parsing capabilities, what we call technically. So if the system had proper parsing capabilities, it will do. It will do for Tally easily because the structure of the Tally is known to all, and then there is a very predefined format for that. Okay. Now, if we take even more advanced level, we may have to build custom APIs. Like there are now, if you take the retail chains, they use their own proprietary software for retail outlets and all. Like number of ERPs are there. Even in SAP, there are multiple versions are there. B1 is there. So therefore, every version comes up with its own structure of data management. So if we know the structure of the data management through an API-based customization, we can definitely import. Now, having imported here, you asked about preparing the Schedule 3 report or whatever the report that is required. So all of that can be done here. There are a lot of automation around preparation of the financial statements. So what we can do is we can import to the trial balance, or we can even import the whole of the daybook dump. So whereby the daybook dump is coming here, and we can click here, drill down, go through it in a month-wise drill down facility, or go into one particular month and have a transaction-wise, and whatever the audit steps that were said by me earlier, like linking it to a checklist or a questionnaire, that we can do from here also. So thereby the ledger scrutiny becomes easy. Okay, and the ledger scrutiny becomes easy and also system driven. Now, another most important aspect that the audit function requires is that while we prepare the financial statements, we may be requiring certain rectification entries to be passed. Certain audit journals that we passed at the fag end of that, maybe out of discussion, the auditor may put up some issue which requires additional provisioning or then reclassification or whatever. So here there is a facility where you can pass a rectification entry, like so-and-so account to be debited and credited here. So this becomes the audit journals. So this becomes journal testing. These journals will have an immediate impact on the financial statements, and we can have a ready-made financial statements prepared or printed out. And then later the accounting entries can also have a consequential transaction to be recorded in the accounting package. Okay, and this is one way to do that. And then next is like generating the ratios on this particular aspect, like whatever the balance aggregations or the balance sheet debt equity or current equity ratios. That is all a simple numerical number crunching job, which is very easy, like aggregating certain things. So having put all the financial numbers, both daybook or trial balance level, and then have a journals on that, to prepare the ratio analysis is like very, very easy thing to do. So this is a way in which we can have an integration between the accounting system, but then there are multiple ways, whether we will have a streaming integration. In a sense, the moment an entry is put in the accounting package, it has to come and sit in the auditing ERP. So that is also possible, but that requires permissions from the accounting side. From the accounting, not all auditees may do that. Maybe they will allow for their own internal audit function, but they may not be in a position to do. It is neither required also. Okay. So this is a way in which we can integrate the accounting into the financial statements. And again, you can raise a memo or a notes or a communication on any one of these accounting systems. And the most important part is the assessment of the risk. So can I continue on that, sir? Or
yes. Carry on.
Yeah. So the most important area is on internal controls over financial reporting, which we call in short as ICOPR. Or there could be risk assessment on the financial statements, or there could be risk assessment at the time of acceptance of the engagement itself. So there are multiple contexts to risk assessment. So we may do the risk assessment to take a decision whether or not to accept the assignment. So therefore, we may have a look at the regulatory mechanism, the frequent changes, the amount of the management override that is there, or the burden from the stock market that the entity had got. So all of this is coming under engage acceptance and initiation, and that is one sort of engagement risk assessment. Okay, so that is one part. And the second one is having at a process level. So every entity will have certain processes, workflows, SOPs, policies, whatever it is, the way, the policy framework that the entity is following. It is very, very important. Now it is an integral part of the independent audit report that we give under every statutory audit, that we must have a process walkthrough. So in order to have a process walkthrough, we must have a facility to record the process in the first place. So when we record a process and have a process walkthrough, and we identify along the process walkthrough all the risks that are identified in the given process and develop it into an RCM, risk control matrix. So that becomes our risk document. This is very, very important. It is more important in case of, it is operationally important if it is an internal audit. It is very important at a strategic level or a policy level for a statutory audit. So now let me take one an example here. So I'm sorry. So here I'm going to the process audit. It's a non-financial, completely non-financial aspect. So here I'm capturing a process. It could be fixed asset acquisition. It could be order placement. It could be any process. So if I go into that fixed asset acquisition as a process, there are multiple steps involved, and each step will have an owner. In a sense, the one who is driving that process in the organization from the side of organization. Okay. Now, the next step is to have a risk assessment of that. Okay. Let us say identifying the need of purchase of fixed asset, there could be multiple risks that the auditor may find out. Okay. Like there could be inadequate identification, or there could be inaccurate cost estimation. So these are the various risks. And if I go to add a risk, each risk will impair, or each risk will affect certain aspects of the financial statements. Now here I am writing one more risk under conducting the cost benefit analysis. So I am writing a risk as management override. And this management override could affect certain assertions. This is very important area. So it could be affecting my existence. It could be affecting my valuation. So what are all the assertions that are affected by this risk? And what are all the financial line items that are affected by this risk? Because we are under purchase of fixed asset as a process, maybe this will affect my property, plant and equipment. Whatever is an asset, it could affect my multiple items also. And then as a risk-based approach, as a risk-based data-driven approach, we may have to quantify the probability of its occurrence and the scale of impact. So let us say the probability of this management override, because it is a closely held company and there are no suitable processes, the auditor may feel that the probability of its occurrence is very high, like 75%. And then the scale at which it could impact the financials, if at all that risk arises, could also be very high. Okay. So now I'm just recording one of the risk. Okay. So now the management override had become one of the parts of my risk register. And that way, this becomes my open risk. Open risk is what is not controlled by any, what is not mitigated by any control. Okay. Now I can visualize the same in a form of heat map, if I can say. So this is my heat map by risk. In this, my management override is coming up in a very higher quarter. Like it could be it is very likely to happen, and it could have a catastrophic impact if it arises. So this is another aspect of audit that requires a lot of technological support. Otherwise, in a given time framework, it will be very difficult. And this is more relevant for bigger audits. Of course, even in a smaller audit also, conceptually, the risk assessment as defined by the auditing standard, that framework has to be there in the mind of the auditor. But then the gravity that it assumes in a higher audit and the likeliness that it is going to be examined by some other reviewer is more. Okay. Now, what happens is the auditing standard says us that the internal control framework has to be tested for test of design and test of detail. So that is what we can call as compliance testing and control testing. So compliance testing is like whether the given process is complied or not. Whether the given process is good or not is a different story. Whether the given process is complied or not. So for that, what we have taken a sample, just like how we have taken a sample. from the number framework. So against that, whether this identifying, whether the conducting of cost benefit analysis. So this is what we call in an process audit as a happy path, or the path that the management has decided, or as a policy they have decided for themselves to follow. So whether that is followed or not. So this is one aspect of the audit. The another aspect is test of design, in a sense that whether the design itself is proper or not. Okay. So in this, the risks that are identified, the identification, whether this risk got involved actually or not. So this becomes some sort of a survey, or this is what is called a process walkthrough. So when we take up a process and conduct it over a given sample, as a walkthrough. So whether the risk got invoked or not in this particular given sample, we say risk got invoked. And then whether the risk got controlled by the suitable control or not. So we have an RCM in place, the risks and controls in place. So in a given transaction, whether the risk got invoked and controlled. So this gives us a basis to conclude the probabilities that were defined earlier. So what we can do is, after taking a 100 or 200 as a sample in a particular given area, conduct a walkthrough of certain bills to see whether the bill processing is happening as per the framework or not. So the results, if you take an average of them, that could become our probability and it could become our risk document. So if you can go here and go to the risk document and analyze the heat map by risk. So for a given process, the fixed asset acquisition, what is my spread of risk? So this could be a very, very important document for the auditor to submit to the management. Okay. Now, another area of risk assessment is to have a risk assessment at a balance sheet level. Okay. This is about processes. Now, on the balance sheet level also, we can do the same thing. Now, what I can do is, in the financial statement framework, I can initiate the risk assessment. And there also, on a share capital, on the reserves and surplus, if I found any risk, so I can go and record the same risk. Now, this becomes a risk assessment at a balance sheet level. So given the context and given the nature of the audit that we do, the same risk assessment may be mandated or may be required and warranted at multiple stages. So this is how we can automate, we can use technology to see that there is a proper risk assessment of the processes followed. Now, another important feature is, let us say we are in one particular financial year. So we must have a roll forward facility to the later years so that the opening balance of the risk is also there. So from the given opening balance of the risk, whether the entity is doing well or it had come down on the risk score, that becomes a very, very important metrics, and it becomes a very important insight both for the management, and it also becomes an important document for us to have on hand as an auditor to see that the SA 315 or whatever the audit approach that we have done, the sample that was drawn, the decision on sample is also not a standalone decision. Okay, whatever the 530 says, before we draw a sample, what we have to see the homogeneity of the risk, the homogeneity of the sample. So for that, unless we do and demonstrate that it was done, that a probable evaluation of the risk involved is done, it is like standing to a risk on our own, like auditor taking the risk of non-compliance. So therefore, this is one area. Maybe I overstepped on that and covered the later also, because they are linked together and make a one concept. And I hand it over back to Sir Premnathji.
Yeah. So yes, coming back again. To the same issues, what we are doing is, we are trying to look at the defects pointed out by various regulatory authorities, and we are trying to see whether we can remediate these challenges with automation. That is what we are trying to understand from the past discussion. So we have looked into the risk of material misstatements. As we have seen, the financial statements are taken from a trial balance, and then ratios are automated. From the automated ratios, we can link up to going concern related issues. There are various going concern related highlighting the issues have been given, like say current liabilities are more than the current assets, net worth is eroded, etc., etc. All those 7 or 8 combination of SA 570, I think, if we can map in the same system itself will highlight the going concern and go and sit at the appropriate place when we are trying to draft SA 700. That is one issue. Next, again, the next biggest challenge is the related party transactions, which have been very often highlighted by the regulators. So with respect to this related party transactions, again, standardized template and then collect the data from related party transactions and then map and then give the define the red flag masters and then link it so that while we are evaluating the related party transactions, we can the system itself will highlight those related party transactions related things. Materiality we have already touched upon. Then professional skepticism, we have this can be done with data analytics and then red flags definition. Then comes most important, sufficient appropriate audit evidence. Many a times this is qualified by the regulators that we are not collecting the evidence with us. So with respect to this, while I am trying to carry out the audit process, can I collect document and keep it at one place, attach the documents, like take a photo snapshot or take a PDF or whatever, whether that can be integrated with the technology so that while I am carrying out the audit, all the papers are at one place. Generally, we know very well at the time of writing the report, we'll try to ask whether have you collected the loan documentation. Let me see whether this has been made as an NPA or not, whether confirmation of balances, did you take the snapshot, did you attach it, or say at the time of finalizing whether the managerial remuneration is authorized, whether the board resolution is there, have you taken a copy of it? And like this, there are many documents. There are many documents which we need to collect it and put it at one place. So whether technology can help us in putting all these evidences in one place related to the relevant item. So I would request sir to demonstrate how technology will help us to carry out this.
Yeah, yes, sir.
Yeah,
Again, relating back to the first sentence that we said, audit is a very intense job. While work allocation is one sphere of that, document management, version control, safety of the document, confidentiality of the document, collecting the document, referencing the document. So there are multiple challenges in this area. So one is we can take pure technological DMS kind of solutions, document management kind of solutions. So they come up with certain features like having all documents at one place, which is a secure cloud OneDrive or a Google Drive or some other DMS kind of a thing, which again in turn uses some cloud. And the second aspect to that is version control or collaborative editing. The third aspect to that is like when we keep all the documents at one place in a proper tagged style, it will be easier for us to retrieve. Okay. But then those facilities are not sufficient enough to meet the audit requirements because the audit requires an in-context reference of the document. When we collect certain evidence, so what for this evidence is collected, that has to be properly referenced. So this working paper reference, sir had already referred to the working paper template that was given by Institute. So it had very categorically demonstrated the manner in which we have to maintain the working paper, the manner in which we have to collect the audit evidence, and the manner in which the audit evidence so collected is referenced in the working paper. The advantage of the technology is all of this is taken care in the back end by the system itself. So just let me demonstrate. In fact, I have already covered that in a way. So when we go to the substantive testing and when we are filling up a checklist, so let me go to the same checklist again. Now here, against the question that we are filling against a checklist, whether the allocation of the cost among various assets is fair and reasonable is a question. Maybe some working paper, maybe some Excel, maybe some snapshot could be a befitting evidence in this area. Okay, so what I can do is I can go here and attach the document here itself. So this is another way of DMS. The conventional DMS, what happens is it is pure physics. They look at the physicality of the file. In a sense, the file is kept at one place. It was secure on the cloud, whereas they are not having the context to the file. The context to the file is again to be decided by us, like a folder in case of a Windows. What happens is in 2023 files under ABC Limited, under that we are saving one folder for us and then saving it. Okay, but that is not a logical context, it is a physical context. We require logical context as well. Otherwise, what for this evidence is collected is lost, and then to make a working paper reference is another job. So we can eliminate this working paper reference concept altogether, or rather make it automatic by attaching the file in the context. So now I'm attaching a file here in the context. So then what happens is I can reuse an existing attachment. If I had an attachment already made, I can reuse them, or I can upload it here under particular category evidences, and then whatever the particular category I may have, and I can then I can upload a particular document here. So the upload becomes in the context. And when I go to the audit documentation and look at the working paper attachments in this particular area, all the working papers that are attached, whether it is in audit checklist or questionnaire or wherever, all my working paper attachments will become collected at one place. So this is a place where all the working paper attachments were attached, and they are also visible in the context. Okay. And there is no version problem here because it will have only one version. If you go and revise the evidence at that particular given context, like in a particular checklist against a question, I'm replacing that. So only one file can exist at that place. One or multiple files can exist, but in that particular context. So working paper, the version management problem is also taken care. The physicality is taken care anyway, because all the systems are getting documented in one assignment, in a given assignment. So therefore, the document management or the evidence gathering will become very easy. Okay. And then again, you can link it up to another ERPs or another kind of systems where you can have permission matrix also. Like once the file is archived, no more downloads are permitted, the downloads are controlled by some OTP or some sort of an email authentication or MFA, multi-factor authentication. So thereby not only the secrecy part of that, safety part of that, but also the confidentiality of the part of that is also taken care. Okay. So this is one sort of technological solution where we can handle the evidence collection, evidence handling, and evidence management. Okay, and it's very wide because it's like we can have any number of checklist or questionnaire or a process or a balance confirmation, and in each of them against any of the questions we can have an uploading the attachment. And the uploading of attachments could also be like here you can see there is one XLS, one PNF, one PNG, that is an image, and one RAR file which is a collection. So therefore we can have multiple kinds of attachments made in the context. So thereby the working paper reference is not a problem at all. And if I go and download any one of them, if I download any one of the working papers here, like you can see there are number of downloadable options. I can define my materiality. So if I go and download, so this is my materiality PDF, just exactly in the way in which our working paper template is designed by ICAI. So we can have this and we can see how the materiality had been defined. Like that in any given context. I'm struck, 1 second, please. So like that for maybe my audit planning memorandum, my materiality, my analytics log, the way I had selected the sample could be a place of, so there are two kinds of evidence, there are two kinds of documentation, rather three kinds of documentation. One, the audit process that is adapted. The audit process that is adapted is my lead sheets or my substantive testing. So my checklists that are adapted, and under each of the checklist, my sample that is adapted, and in each of them, the questions and the answers that are given. So this is a documentation of the process. The another documentation is all the evidences that are collected to prove that the work was properly done. So that is another item of documentation. And the third one is to bind them all together and to link it up to the final conclusion stage, which proves that the audit is sufficient enough to cover the auditors. So this is how we can handle the documentation part of it, whether it is evidence gathering or the process of audit as such. Yes, sir.
Right. So what
I couldn't hear you, sir. Hello.
yeah, coming back.
Yeah, okay.
Coming back to the same defects pointed out, and then we are trying to see how we can remediate with the automation. And we have looked at the sufficient appropriate evidence, how it can be collected, and we have also seen autofill or whatever it is from we can capture data from other systems, like say if it is already in Excel, you can pull it for showing that evidence and all. Then internal controls, IFC point of it, we have seen a standard risk control matrix. We have seen how it is. And audit documentation, I think we can take up last, that with the process log and timestamp, etc. The Shiv Prasad is just taken with a speed, and then we can have a very detailed look at each and item wise when it has been picked up. Because if you remember, recently NEFRA has pointed out in one of the case, after the NEFRA has taken up the scrutiny, then the audit firm has submitted calculation of deferred taxes. Then the NEFRA has pointed out, after I have issued the notice, you have prepared the deferred tax evidence and then pull it to it. Meaning, NEFRA is today so empowered with technologies, they are talking about timestamp when it has been carried out. And that is a big challenge for us. And more than that, while they were referring that after I have given the notice, you have started preparing the audit documentation, as rightly said by Prasad, that once the documentation is done once the audit is completed, within 60 days, the audit has to be archived. And those who have undergone the peer review process, there is a question: what is the system followed for archiving the completed audit? Is there a control? Like, now once you have a system like integrated system, audit system, when someone wants to open the closed audit, now that will start asking for the OTP or mail confirmations and all. That itself is a timestamp, indicates that no one has tampered once the audit is over. So these facilities can be structured into the system, meaning that every word of auditing standard can be customized, can be written into a syntax, every procedure, like every word in auditing standard is a procedure, and such procedures can be syntaxed and written as a program and controlled very well, so that it can test to any type of regulators. That is one issue. Next, coming back to major qualifications that the regulators made is that engagement quality control review or maker and checker. Like, one member has carried out the audit and how the other has checked, whether you have that maker and checker process, and who has made it, who has checked it, is a very big, we are talking about the internal controls on the other side of the table on the business premises. But what about the internal control mechanism in our own firm? How do we demonstrate this is the biggest challenge. So I think I request how this internal maker and checker concept, which is even there in Tally, can be used with automation in audit process.
Yes, yes. So certain very interesting uh, certain interesting insights given by Premnath ji. On the timestamp of the document, Nefra had gone into the documentation and had pointed it out that the whatever is the example, the deferred tax calculation is made at the after the Nefra had pointed it out and after they have raised the issue. With the increasing digital footprint, all the audit community is going through that risk. Okay, whether it is mail correspondence, that is leaving some document, that is evidence. And even every file, the Word file or the Excel file will also have a metadata, which will give a timestamp as to when it is prepared, when it is modified, last created and last modified. And if we use technology, if we use any technology, then we are creating more evidence for the regulator to look into.
Yeah. Sorry to interrupt.
Yes, sir.
Not to interrupt your flow. Basically today the kind of audit process what we are doing is, it is neither completely technology nor completely manual. So this is a bigger challenge, because as you rightly said, I'm using so much of digital data, which is as an evidence I am collecting it, which has a timestamp, which can never be erased. And that is posing the biggest risk. Either to avoid that, I should completely come down to the manual audit, which is highly impossible today. And hence, the only way out is to make all the things onto one platform and structure ourselves. And without that, audit will be very tough. Today ITR filing without a tool, with the given resource strength, without a tool, we are struggling very hard. So in the same way, going forward into the audits without a tool, carrying out audit is high risk. More than that, 2-3 days back, our Prime Minister Modi ji, while opening a G20 hall in New Delhi, he has said that India is going to become one of the third largest economies in the world, meaning that the Prime Minister of India is struggling to be placed into the third position or one of the third in the world. When the GDP or the business or the growth is going to be in one of the third place, to that we are nation building, we are partners in nation building. So to what extent I, as a chartered accountant, working with technology to support such a huge magnitude of growth in the days to come. Hence, unless you put everything onto a digitized mode or close all digitized mode, make it full of paper audit, I don't think that is possible. So when I say that one of the third in the world, meaning that many multinational companies will come into this country. Now, at that point of time, how do I, as a small and medium practitioner, demonstrate to them that I have a high quality audits so that I can compete with the big MNC firms? Unless and otherwise, we have a tool. What we are discussing today, we cannot compete with them. And this tool itself is sufficient to compete with Big Four or whatever you call it as one of the MNC firms to compete. They are strong today just because of the tool, and hence the tool is required. I just give it to the Prasad now to carry out.
Yeah, perfect, sir. Perfect. Can't agree more. Can't agree more. And it's a clear thing. Yeah, as you said, either fully digital or no digital. No digital is out of way, because even if we wish to be no digital, hypothetically, the client's data is already digital. Okay. So the starting point of the audit is digital. So therefore, there is no way that we cannot expect a handwritten or a handout of the financials or anything by the client, by any of the client, even by very smaller client. Okay. And we are moving towards more and more digitization, because at a transactional level, because after the implementation of the GST, the transactional level detail, even at a HSN level and the vendor code level details, at so much of a granular details are being captured by the government. So referring back to your slide, we are getting sandwiched between two technological movements. One is of the client and one is of the government or regulatory. So therefore, if auditor is to stand between these two ecosystems, definitely it requires the transformation that is required. And of course, transformation had started and it is happening also. But then it is like in bits and pieces, like some analytical things are there, like if you fetch certain data, so the tool will pick up certain 30 to 40 or maybe 100 anomalies from a given data at a set algorithm. So like all transactions in debtors with minus balances. So that is one rule that it will, and it will fetch those kind of reports. So these small what you call that, small dots are happening already. So all of these dots have to get integrated, and what we require is an ERP kind of a thing. That is what I'm talking about. So we require an integrated system, because we cannot work on multiple technologies at a time. Every technology has a cost of adaptation, cost of time and all. So just perfectly said by user. And it is impossible for us to stay aloof or stay away from technology. So better is to go against that. The best way to face the trouble is through it. So therefore, just go ahead and then embrace the change before the change comes in and hits us on the back. So yeah, on that point, so you're talking about the next level, sir, like
Maker and checker.
Sir?
Maker and checker.
The maker and checker concept, or the quality control, SQC part of that. So we have not only the auditing standards, but also the quality standards in the form of SQC, SQC1. So which requires the auditor to demonstrate that the audit itself was done in a proper internal control framework. So there are checks and balances like maker and checker. And there is a regulation that there should be a review partner. And in case of a proprietary concern, where there are where there is a single head, at least the review has to be done by some other external chartered accountant. So that was a rule position we are going to, where we are under at present with the SQC framework in place. So how do we ensure that there is a maker checker concept? And apart from maker checker concept, there should be a concept of the engagement partner, like who is one person vested with, that is what the definition of engagement head as given by the framework of auditing standards, that who is charged with the responsibility for that particular assignment. Okay. And there is also EQC, engagement quality control review process in place. So there should be an EQC, so where there should be an allowance for a person who is not part of the audit. So who is neither a maker checker or who had not done anything of the audit, to log on to the audit, to run through the audit files, to confirm that the audit had been conducted in a way that it has to be. Okay. So these concepts, the maker, checker, the permission, and the sign-off part of it, and the quality control review part of it. So how they can be integrated, again, with the integrated system, it is all in place.
Further work allocation also.
Yeah. 1 second. So every time I share my screen, the settings are getting lost. That is one problem I am facing. Now we are coming to the manpower side of that, the permission side of that. Again, going back to the first one, the planning and the program and the permissions. So even before that, when we decide on the engagement team itself, we have to define our engagement team with makers. So who are all going to be the makers or the possible makers in this particular assignment? the possible checkers in this assignment, and the managers. Managers are like who can guide the traffic of the audit, like to change the permissions and all. Okay. So when we come to the planning part of that, against every particular item of the audit. So let us say under the configuration, knowledge of the business, audit acceptance, consent letter are there. So who could be the makers and who could be the checkers? So they are defined over here. So what happens is this becomes a definition later when we go to substantive testing, again back, maybe a checklist or so. So against each item of the checklist so and so. So there is a concept of maker and checker. Okay. So who made this and who could check this and what is the status of that? Like I'm logged in as Nishant, so I'm a checker, so I can confirm this particular, and then it is turning into green. Let us say I'm disapproving it, it is turning into red. Okay, so this is the checker who had this permission of closing it off. It could be a senior article student also, because this maker and checker is at a very first level of the audit, filling up of a checklist. Okay. Apart from that, at a little higher level, maybe at a lead sheet level, maybe we require a different mechanism of having a performer approved and signed off and reviewed by. So these tags are there. So this way, this ensures the SOD, segregation of duties, and also DOP, delegation of powers. Okay. So there should be proper segregation of duties and there should be proper delegation of the hierarchy. Of course, this becomes more relevant in case of bigger audits. Nonetheless, even in a smaller audit, there should be minimum who had done. It should be verified by someone other than the hand that had prepared. So that goes with a very basic tenet of the audit itself. So here you can see for each of these, like audit of accounts payable and receivable section. So who had performed that with a name and timestamp, and who had approved that? Let us say I'm coming here and then signing it off and marking it as closed. Now it is like signed off on today. So this is a sign-off mechanism. And this is by review. This is an EQC review, engagement quality control review. Normally, EQC review, EQC partner will not have permission to do any part of the audit, not to raise a memo, not to raise a communication, not to raise any substantive testing, scoping, or whatever. His only duty is to run through the notes. He is to run through the notes. Like if this particular area, this is a lead sheet. So lead sheet for receivables and payables. So here we are documenting the audit approach. So what is an audit approach of this area? So in order to ensure the existence of fixed asset, we have applied the whatever is a third party verification or whatever it is. So this is an approach note. So for that, we are having a performed by, signed off by, and reviewed by concept, so that we are demonstrating that we have followed the good order, and we have followed that the who had made the document is not the one who is going to sign it off. And there is an engagement quality review also. So again, going back to the planning stage. So this is a permission. This is a permission, the program and the permission. So it is like what to do and who has to do. And thereby we will become a budgeted hours, like even in the SQC, this is also there. When we see the recent document issued by Institute, which had become mandatory from 1st of April, which has become suggestive, of course, which is going to become mandatory from next April. The digital competency, the digital maturity model, and the AQMM, audit quality. So it says that there should be proper team strength and there should be proper budgeted hours. Now you can see here, the total planned and performed hours of each resource is getting tagged by the system by their performances that are logged. Okay. And you can also have an work allocation, what sir had said. So here what I'm saying is, on this particular day, 27th, there is a work allocation happening here, because against this, let us say, knowledge of the business, if I am going to create a plan on that and say that so-and-so person has to perform so-and-so job. So let us say Praveena has to so go collect, and let us say I'm calendarizing it. My work allocation is also happening here. Okay. And that becomes my audit calendar, which is automatically generated by the audit allocation that we are doing. By the work allocation that we are doing. So this is my audit calendar at a very macro level. Now coming to sign off. So it will demonstrate what works are done and what works are pending. So let us say ICO4 and risk assessment is done. Okay. And what works are done and what works are not pending. And at an engagement quality control review point of view perspective, the EQC review. So this is an EQC review. typically can be accessed by only by the review partner. So by the way, we can define who is a review partner here. And this review partner will have an access and he can raise his comments. So let us say under mandatory audit committee or whatever, he may raise a review comment and say that kindly provide the proof of inspection. So this is a question that a review partner is raising, and this initiates a conversation between the audit engagement partner and the review partner, and the engagement partner is answerable to the review partner to ensure that the audit had happened properly. So this is an SQC mechanism in place in the total scheme of things. So where there is an audit calendar happening, calendarizing of the work, because we are capturing the work to be done in this particular fashion with their start date and end date at every milestone level. So what is happening is the time, the billable hours and the non-billable hours are getting accumulated. And this gives an engagement partner and the sign-off partner, the review partner, the EQC partner, a way to look into the things. So what he can do is he can click on any one of them, like he can click on audit materiality, and he can go and check if things were in place or not. And if he is satisfied, he can review it and then call it proper and close it off. So this gives a mechanism to establish, not only this is first of all facilitating in nature, and second of all, it is very, very important for us to demonstrate that we have followed the AQMM, audit quality maturity model, that was given by the institute. And there are proper checks and balances within the audit office as a function. As a function, there is a proper maker and checker concept with SOD and DOP, with segregation of duties and delegation of powers in place. Yes, sir.
Again,
Back to you, sir. Thank you.
yeah. Right. So we talked about audit documentation. We have seen internal controls, and then very important one, engagement quality review, which is many a times the regulators have pointed out that there are deficiencies in auditing standards. So finally, we have seen the financial reporting framework where from an Excel upload system itself is able to standardize the reporting, not only standardizing, but it is giving ratios. Those ratios can be linked up to the going concern related issues, professional skepticism related issues, and further processing and so on. So with respect to reporting requirements, like standardizing CARO and IFC, if you can take us how, from looking at CARO as a point of view, how can we, like we have said that from tally we can drill down from balance sheet to the voucher level. So from voucher level to balance sheet. In the same way, from the basic steps to the reporting, and from reporting to the basic steps, if you can, if a technology can help us, and that is what day in and day out we are using in the all those tax tools like what I've said, Comptax or Winman Genius, Taxman, Winman, and all those things have a drill down. Tally has a drill down. That is what we are, habits die hard. That is what I am habituated. So can technology give us in audit softwares also where a drill down, so that I can if I forget something, I can quickly drill down and come down and come up to rectify the process. Is it possible with technology in the audit software?
Yeah, absolutely. Am I audible, sir? Yeah. Absolutely, yes, sir. Absolutely, yes. And the moment we are putting things at one place, okay, so that gives us a facility to drill down. Okay. And we can also not only have a drill down, but we can also have a mechanism to run through. Yeah, just a moment. My screen share is struck. Yeah, got it. Yeah, now I have raised a memo, as I said. So once I click on a memo, I can scale up back, go back to, like, I'm going to the response and finalization section, which is naturally the next step after that. So from here, what I can do is, if I can go to any report that is linked to that, like Caro 3133B, I can click there and go to that particular report. Okay. Similarly, from the report, I can come down backwards in the same style. So when everything is at one place, the natural consequence of that is that there will be a natural drill down possible. Like if I go to a checklist, and if I go to a checklist and see on a given aspect, what are all the memos that are raised? Maybe there may be no memos here. Yeah. Anyway, if you can see here in the element fixed asset register, subject number 259, all the memos that are raised are getting documented at one place. So there will be like from Caro, we can drill down, go back to from the Caro, you can come here and then drill down to any particular area and see the findings that are there. So it's a bit slow. I am operating on mobile data now. So if I come here, now I am on the final screen. As I said, the ultimate culminating process of the audit is a report. Now for this, against this particular report, what are all the findings that are mapped? So I can see here, I can click them and then go to that particular memo. So similarly, from the memo, I can go to the base document, I can go to the base. Just like how we traverse from balance sheet to trial balance to GL to voucher, we can also have a same traveling mechanism from both up and down. And not only that, like if I see the Caro report, in an integrated system, we can also have a facility to look at all the industry practice or a guidance note on that aspect. Like on this particular area, what is various companies reporting, like how other industry had reported on this particular paragraph. What is the practice of the industry? Okay. Similarly, what is the institute guidance saying on this? So what is this guidance saying on this? We can have a in context mapping of my guidance as well as industry practice, which will also help us in draft things properly. Okay. And though not covered in the question, just in the interest, I'm also covering one more. Because we have mapped everything to a particular variable, the power of automation is like, I'm just taking some random example. Now I'm going here and I'm just typing one sentence. Like we have found total underestimation of expense. And I can call an audit variable here. So what happens is this is a dynamic variable which is coming up from the audit notes. So even that kind of integration is also there. Now what happens is this pointer, when I update it, the system will read it from the database and it will pull with the static, not this is a static text I am having, and this is a dynamic value that is being picked up from the, so thereby the copy paste errors are avoided altogether. What happens is like whenever there is a change in the audit notes, automatically this stays intact. This number, whatever is not typed by me, rather it is a combination of various audit notes which are getting aggregated and then getting reported. So this kind of a drill down and backward integration is also there. Again, at the cost of repetition, we have evidenced a huge transformation in the accounting world, that they have moved up from standalone accounting systems to robust accounting systems to ERPs. So that kind of an integrated, now this is a drafting integration. So where in my draft, I'm integrating my audit notes. Similarly, if I go to my misstatements, are integrated to the financial statements, and wherever there is a breach of materiality, it is alarming me in red. So this is an integration of the misstatements to materiality. Okay. So similarly, if I take a fact and whenever there is a change of the fact, like in my decisions, now these things are yes, yes, and no. Now, if I change one of the facts, like if it is not a listed company or so, the consequential decisions, that is another integration. So this way, in an integrated environment, we will have a natural drill down facility. So we can traverse from memo to finalization to the report, as I said. So you can pick up from any memo. Go to its finalization. From there, you can go to how it is reported. From there, you can go to any particular report. So you can move back and forth in the system, and it's a simple thing. See, once we have an integration in place, so these are incidental advantages that will flow anyway. Yes, sir. Hope that.
Yeah, very neatly explained the use of technology. That is how technology enables this. That's what I have just opened up. I said technology is not for convenience. Technology is for quality demonstration, because ultimately we are responsible for the quality, but not for convenience. But of course, habits die hard. As I said, technology is more used for convenience rather for quality. Okay, technology.
I differ a bit on that, sir.
Right.
There is convenience in quality in medium to long term.
Correct. Correct. Yeah.
Maybe there is a cultural shift, but then quality had a convenience. What happens is that the transformation had a little capital effort.
Correct.
Which will have a revenue advantage. So to convert it in our language. So there
Right.
is a little capital effort which will flow into a revenue advantage.
Yes.
So that is how convenience is a natural outshoot. So when there is a process later, what happens is I can log on to my system, see how many things are tagged to my name, close them, my job is done, I can leave the office also.
Finish.
Yeah. It enables work from home, it enables collaborative working. So these are incidental advantages that will anyway flow.
Yeah. As you rightly said, the initial capital cost is always there, but most of the technologies I am as an end user, like I am as an end user for Swiggy or Ola or Zomato or Amazon. I am as an end user. I am using an integrated system and I am enjoying it. And I expect my audit software also to work for me. At the initial stage, it is not possible. So we are making audit quality is not quality is for me or for my regulators. Here the end user of my audit statement is the stakeholder. The major stakeholder here, is the regulator. Of course, investors, but those investors are looking at the regulator, and hence the major stakeholder. What we are worried more are the regulators today. So if you can demonstrate to them the ease of audit, probably there will not be any issues on the profession. Today there is a hit on the professional brand image, and probably we all can avoid it with a proper automation in place for simplicity, for the which will benefit the end user. There is no second thought that it is going to benefit even the auditor also from that point of view. Okay. Having said that, we have one issue with which we will close. Finally, how does all this end up into a proper documentation? If you can just, how that automation can help in documenting with something like a timestamp. If you can just demonstrate it.
Yeah. So you had made certain philosophical remarks, sir. So on a very high level, so who is going to be the end user of the quality or convenience, and who is going to be the ultimate user, the stakeholder of the audit process? I concur with you, and I also add 2-3 points on that. There is some cultural shift also that is happening and has to happen. Okay. The visibility of the things is growing up with the opening up of the technology. Our lives are becoming more and more transparent. The shopping patterns, the purchase patterns, the spend patterns, not only at a personal level, at a business level, at every level, they are becoming more and more transparent. And when it comes to the comfort zone of non-compliance, if it is there, it is only because the regulator is not in a position to enforce because of lack of technology. Now, the technology in the hands of regulator is more powerful. So therefore, ensuring compliance has become easy for him. Because ensuring compliance has easy for the regulator, he won't let things go as it is or as it was in the past. So therefore, this we have to keep a watch on. And of course, nothing is permanent in the world except change. So therefore, the change is happening. Okay. And on the top of this, this is one.
Just to interrupt.
Yeah.
I, as an end user, if there is a fault in my Ola service or Swiggy service, I'm immediately using technology to corner them and get a benefit or to offset my loss. Am I right? So in the same way, the regulator who is becoming the major part of a stakeholder, the moment he finds fault and he wants to capitalize on it because the technology is permitting it to do today. And that's where we need to be very cautious not to allow someone to raise their finger on us. And that's possible with technology. Yes, sir. Please go ahead.
Exactly, sir. Exactly. So definitely it's a time to catch up, and the catching up is happening in bits and pieces. We are all knowingly or unknowingly, we are all using a lot of technology, like lot of work allocation is happening over WhatsApp. Lot of document collection is happening over Gmail, and a lot of whatever you call, a lot of data analytics or filtering is happening. Now, what is happening is it is all scattered, and it is at a various stages of evolution in various stages of stakeholders, and it is happening big. And another thing around the corner is the AI, artificial intelligence. We see now the chat GPT. Now, if you say search, so search is more on information. Now, AI is more on knowledge. So it is not the pure information that they are giving, but the synthesis of the information into a proper knowledge. So therefore, the availability of the knowledge is also increasing. This empowering is not to any one particular person. So the auditee is getting empowered, auditor is also getting empowered, technology is also, regulator is also getting empowered. So this also calls for a time for action. Be that it may, and on that, you had asked about the documentation. And when the systems are integrated, documentation becomes automatic. There is no question of documentation as such. And what happens is, like, if I go to my audit findings and see the memos, okay, these are all the various memos that are raised. Now, if I go and download it in a form of a PDF, so it will allow all the user findings to be downloaded as a single PDF. Okay. So that way, what happens is everywhere there will be a facility to document. Now, it is exactly in the format that is given by institute. So client assignment financial year prepared by, signed off by, reviewed by. So in an exact format that was prescribed by the institute in working paper template, all the audit memos that are raised in an audit are getting downloaded. So this way, every aspect of the audit, so I have to stop the share again. So this way, every aspect of the audit gets documented. Apart from that, we can also go to audit documentation tab, download the audit documents, and you can see here all the balance confirmations, physical inspections, rectification entries passed, permanent file, current file. So you can go hit on any one particular area, and that particular area will get downloaded as a document. I can also download all of them into one particular PDF as a binder. So which will speak for the whole of the audit. Like if you see the current file, so in the client assignment financial year format, what is the current file? In that, there are various heads like correspondence with management, decisions of the management that have a bearing on the audit, significant events occurring after the balance sheet date, audit notes and reviews on that area, and performed by, signed off by, reviewed by. So this audit documentation, nobody need to put any effort. That 60 days and all is also not required anymore. It is not required because the moment I am doing it, it is like the time that it requires in an accounting package to prepare a balance sheet after my day book is done. The question itself is not relevant, any more relevant in a real-time system, because the moment I raise my JV, the moment I record my JV, my balance sheet is done then and there. So similar thing is happening to the documentation. There is no audit documentation as such in an integrated ERP Outlook. When we adapt the technology as an ERP kind of a thing, there is no documentation. The moment I put 2 more entries and download my memo, those 2 more entries will come and sit in my memo section. The moment I take 2 more checklists and take 4 more samples and then execute it, that substantive testing will get part of my documentation automatically. So my documentation is happening on a real-time basis. So if I take my audit file, on day 1 of the audit, it will be 10 pages. If it is on 10th day of the audit, it will be 100 pages. So therefore, documentation, download audit documentation, it is happening on the own. If I go and click on audit planning materiality, so it will generate my PDFs or my documentation in a format that is exactly prescribed. So therefore, the risk, the time, the effort, and the cost that goes into generating audit documentations is incidental. It's very much captive in the process itself, and it happens on its own.
Okay.
Yes, sir.
Yeah. So it's almost we are left with last 10 minutes. I just quickly finish off this formal PPT and then leave it to the moderator for any further questions. I'll just quickly run through this. So we have talked about this. This is what we have said, that no documentation, and I am signing, giving an attest function and generating UDIN. Yes, documentation has to be in place. If there is no documentation, it is clear that I have not carried out and given a false report. So, but here technology enables us to do it. Like now we have seen the documentation. Technology is enabling to carry out all this 320 pages of documents. Technology enables to print 320 pages of document with relevant data as soon as the audit is over. Rather, as and when the audit is going on, to that extent you can print and carry out and comply to the standards. And all this, yes, now the question is, yes, this process, the whole process is computerized, is possible to be computerized. And we have used all in this is audit planning, risk assessment, questionnaires. All these tools have been brought onto one standard common platform, meaning, I'm repeating at the cost of boring you, that every procedure word written in the standards on auditing, which is running into thousands of pages, is possible to be computerized, is possible to be automated on a single platform with analytical tools, with professional skepticism, with risk of material misstatements, linking to reporting requirements. And since it is on platform, it will comply with, we need to comply with all IS standards. Otherwise, that is another Information Technology Act related consequences. Then, yes, we have seen the SA 315, which is internal financial controls, heat map, and all can be, for each area wise, can be documented and linked to the IFC reporting. Then if such a platform is not available, we need to have a templates in Word or Excel. We need to have a mail merge of kind of things. We need to have a drop down kind of a thing in Excel independently, which doesn't get hooked up to the final report. So if you are not having a standard tool, then integration is the biggest challenge, where we may end up in committing errors. And these are various tools and things which we do it independently on a different different tools which are not getting integrated. So major hurdles, as we all know, every chartered accountant realizes this. Now you would have realized this. The major hurdle for adopting is tone at the top. Firms should make it as a policy to use technology and tools. One good thing is, sir, today I am taking 1 crore of housing loan. I am taking 1 crore of housing loan. How much loan did I take to develop a tool in my office through which I am living today? How much I am feeding to the technology today? A very conscious question that everyone needs to ask. how much I am feeding to the technology. Without technology, there cannot be an audit, there cannot be a business today. So I'm eating so much of calories to maintain my body. How much of calories is given to the technology to survive? If technology is not there, I'm coming to an end. So how much I am feeding to the technology other than buying some small tools and paying for my internet bill? So that's a question we need to ask. Next, is our segment-wise turnover matching with staff strength? Disastrous effect is unskilled staff working in structured environment. Today, income tax is highly structured. MCA is structured. Banking is structured. Everything is structured today. And do we have a skilled staff? Now, skilled staff working on unstructured, we are all skilled chartered accountants. And the way in which the other businesses today are unstructured, we keep quarreling with the clients that you come on the last moment, 31st July, 30th September is what you come. They are unstructured. I am skilled, but we have a conflict. So this we need to match. And this, if you can match it, we are adopting to the technologies. So I wish you all have a happy audit season with very good technology. Thank you very much. And then I hand it over to the subjects and Singh sir.
Thank you, sir. Thank you for a very detailed session on this audit technology. A couple of questions are there, and if you allow me, I can ask.
Yeah, please. Yeah.
Okay, sir. So, sir, one of the participant wants to know, wants to see basically the going concern checklist from the ERP which was being used.
Yeah. Yes. Going concern 7 or 8 points are there, as I've stated. Like current assets, current liabilities are much higher than the current assets, and then net worth is eroded, and so on. Like that, you have so many issues there. So all those things, once a trial balance is brought into the system will make the programmed schedule 3. From that, current assets and current liabilities, or all those ratios can be carried out, and then system itself will say there is no growing concern. And that's possible.
Okay, sir.
Yes.
And next question is, one user wants to know what are the practical aspects of applying the technology into the small clients. Like, sir, you have just told us that there should be tone set up at the top. But what when the client visits practically, how much it's feasible to adopt this into a smaller clients?
Yeah. See, there is nothing like big or small. The audit, even if I am signing one item balance sheet or a big LIC balance sheet audit, the risk is risk. So when I adopt 10 lines of trial balance into my system, the system itself says these are all the materiality concepts, and itself will automatically make my life more easier. Yes, Prasad garu, you can.
Yeah, yes, sir. Exactly. And the thing is, like having technology is like having an infra base. Okay. So it does not mean that we will be using the same for all. Like if you take an accounting package, it will have inventory accounting, it will have branch accounting, it will have inventory management, tax management, cost centers, all of that. In a given case, for a small trader, we will never use cost center. So even if we adapt a technology, how much of a technology we will adapt in a given assignment is again a matter of judgment. So it's like an infrastructure, it's like a kitchen we have. So what to prepare is up to us. What ingredients, what recipe on a given day changes. So not that a bigger tool will push us through a process. Of course, it does happen to some extent because it will put more processes in place. The initial turnaround time will increase a bit, but then it will as a log function, it will come down. It will come down very exponentially down. because next year everything is in place. Next year, it's like everything is in place, and then it is only an incremental change. So therefore, it is not about, like sir said, it is not about big and small, it is about the choice. Okay. How much to use in a given particular case. Okay. There is a cost benefit analysis to everything, including a technology. How much we use to a given client, given assignment, more particularly. And so, as sir said, risk is same. Whether it is a multi-crore or a multi-division, multinational entity or a small entity, the moment I sign and then the moment I issue an UDIN, I carry the same risk.
Right. Thank you, sir. One last question, sir. One user wants to know, can we know what is the ERP which is being used? So,
yeah, and in a sense, I'm not sure whether I can, as per the rules and the regulations. So that is why I haven't named anything in particular. So, what we can do, a small bit on introduction. So myself and Premnath Garu, we are traveling and then we are doing these technology sessions for quite a long time. So I'm a chartered accountant and a cost accountant, these are also. Then what I felt is like the small tools and all, what I felt is like the world, the technological change at which it is happening, it requires us to embrace a bigger change that is in the offing. So that is why I did my data science also with ISB. So any technological initiative or handing out, that also you can reach out and we can help. I'm not very sure about the naming and then part of that. Premnath sir, whatever it is on that, you can go ahead, and then for any questions or that, you can definitely reach out to any one of us. We can help us out offline on a need-based thing. Can mail us or
thank you, sir.
Yeah. So I'm just leaving my coordinates to meet anyone who had any on this particular, whatever is it's because it is a cross learning experience, and whatever little that I can contribute. So to the profession and to the person, definitely I can take it forward. So these are my coordinates and handles on that. And name of that you can, if required, you can share, sir. Not an issue. Thank you.
Okay, sir.
Yes. They have, anyone is interested, they can reach out to you, because I'm respecting the ICAI guidelines. We don't want to talk about.
We are taking technology as a technology, as an enabling factor.
Right, yeah. And one should appreciate that this is not a product being developed in the last 1 year, 2 years. It's taken more than 4 years of time. You all know that SAP has taken 30 long years to roll out, and one can imagine what can happen in these. But without SAP, there are no companies, big companies, not possible. Now, smaller companies also, they are moving into. So similarly, it's the need of the hour, and anyone is interested, they can start developing it, because the tools are equally available today to develop their own tools in the same way. So it is left to you. Yeah.
So thank you, sir. I think you have answered almost every question, and it was a very detailed and nice session, sir. So thank you, both of you speakers, sir. A very warm thank you. And I think it was a very enlightening session about technology and audit. So it was a very detailed session also. So thank you, sir, for your time and efforts. And we look forward to hearing you again. Thank you, sir. Thank you.
Thank you very much.
Pleasure is ours, sir. Very happy, and Premnath sitting with you is like a learning every time. Thanks a lot, and thank you, Singhji, for the opportunity. We thank DAB also for that. Thank you.
Thank DAB, and thank you. I thank the Nanda sir for
sir, more particular
again and again. Thank you.
Thank you.
Thank you. Right. All the best, sir. Good night.
Good night, sir.